Rohan, so you're welcome. Thank you. You're welcome. Hey, we're live.
We're live?
Did you know that?
Whoa. Whoa. Hot mic.
Hot mic situation.
There's
It's all right.
a deep drive ball left field. What's that guy's name?
Tom Brenneman.
Yep. Good job.
Yep. Yeah. Pop
Good
quiz. Pop
By
quiz.
the way, you see the catch the Mets game yesterday?
No. Why would I do that?
I don't know. The Cardinals won, though.
All right. Speaking of baseball, this is off topic. Do you know who's in first place in the American League? It's the Yankees.
Really?
Yeah.
Well, the Mets are doing pretty well, too.
Mets are doing well. Anyway, enough about
The
that.
Mets always do well at the beginning of the season, and then they kind of drop off.
This, again, in the not so distant future, when everything in life is tradable, I want to be able to short the Mets.
In, like, July.
I want to short the Mets in, like, May.
June, yeah.
Yeah.
Yeah, like hot April, and
Yeah.
then just, like, complete disaster
Right,
from there.
right. All right, we got a lot going on today, man. We got Facebook.
Wait, do you want to talk about it now, or you want to wait till more people come in? It looks like people are still coming in from...
It's a slow trickle. Yeah. Wait, Pepsi just got all... What does this mean? From Bubba Sheeb. What does that mean?
I don't know.
I don't know either. Bubba Sheeb, what does that mean, man? How is Sheeb doing? I've been so focused on Doge. I haven't looked. Ride and Dirty. That's a good song, Ride and Dirty. Ride and Dirty needs to make money. Okay.
We'll talk about some trades you can potentially make money
We
on.
can try to help you, but I can help you make money in the long term. If you didn't make money now,
I can give you some options. No, not options is an option. Well, they will be options contracts, but I'll give you some different options to pick from, and some of them may end up being profitable. That's all I'll say. Not investment advice.
Okay, so Ride and Dirty is in the market for some options trades.
All right, we'll get to
all
some.
right.
We'll get to some options trades. I've actually been cooking some up today, and by the way, Spencer, I have been looking at some Twitter puts that expire next Friday.
You know what? This is why I'm not one of the reasons why I'm not a good trader is because I just like forget to do things. So, but I need to focus up and get into my account and buy some puts. Like that needs to happen because the longer this goes on, it seems like everyone's freaking out now that Elon's not going to buy Twitter. Doing some risk arb here. I'm buying Twitter for that little arbitrage play. If this deal falls apart, I'm shit out of luck unless I can get some puts, and that's what Nick suggested I do because I don't have enough to I don't have enough to do like a covered call. So,
I was really confused. So yesterday I saw this headline.
Okay,
did you see this?
I did see that. Read the headline.
Okay, it says so it's breaking views, not breaking news, but breaking views.
This is from Reuters.
Or is breaking views like a subset? I don't know what that is.
So that's the confusion. So
breaking views, is it like opinion?
Yes. So Reuters is a newswire service, right? So
correct.
So they basically make their money by selling their news wires to other news organizations, right?
Like Bloomberg.
Bloomberg does it as well. But Reuters and AP are kind of the two major news wires, right? So it's
I was saying no, Reuters sells their news wire to Bloomberg.
Yes,
for the Bloomberg
yes. And so a news wire is literally what it sounds like, right? They will just like it's basically just a feed, and they will just submit stories, headlines through this feed, and everyone who pays for the feed gets it. Reuters has an opinion section, right? That they call breaking views.
Got it.
That is and there's a reason why in the headline you just read, the very first word was breaking views because they're a newswire service. When people see a headline from Reuters, they immediately assume it is news. They make the first word breaking views. That is their like branded opinion thing. So this is an opinion. This is a column. But I saw that headline too, and I was like, and so it said that Elon's not going to buy Twitter, right?
Yes.
But it was one person's opinion. So I don't put a lot of stock in that. But it's confusing.
Well, I saw that. So I saw it being shared around Twitter, and it made it even more confusing because on Twitter I just see like Reuters headline, and so yeah, I'm thinking,
Yep.
all right, this is legit. And
Yeah.
honestly, this is kind of what I think too. I think that Elon won't end up buying Twitter, but I don't have anything to back it up. It's just kind of my personal. What'd you say earlier that Bloomberg is pricing it in at
Yeah,
35%?
I
if the
saw
deal
that from
happens?
Bloomberg is like 35. But I don't know where they get that from.
So this is the headline that we were talking about. Breaking views. You can see right here, not the actual Reuters. If
It
this
is Reuters.
same,
It is Reuters.
yeah,
This is the
I'm
same.
saying if this same headline, just from right here, this highlighted part
Yeah.
forward, Elon Musk probably won't buy Twitter, comes from just Reuters, not the breaking views
Yeah,
part.
yeah.
It's completely different.
It's market moving.
Market
Market
moving,
moving.
yeah.
Yes, but
So we will see, but that's one of the options trades I'm looking at.
gotta
Are
buy
cheap
some. Yeah.
Twitter puts that expire next Friday, because I do think like
Next
this,
Friday. Holy! I was thinking like June
no, I think if this deal
or
falls
July.
I think something could happen this weekend.
Oh shit!
Because I don't know if you've been keeping up with everything that's been going on Twitter the past like
No.
24, 48 hours. There's one woman, an executive at Twitter, maybe a former executive. She went on Joe Rogan with Jack Dorsey and Tim Pool.
Okay.
And Elon's basically been kind of.
I heard something vaguely about that, but he said he made a comment, and then all of a sudden, all these assholes are just like.
He's basically just been publicly criticizing her. I wouldn't say anything more than that. But like yesterday, kind of, and so it happened for the first time 2 days ago or whatever, and people kind of started, you know, not attacking her, but just hounding her, on Twitter and whatnot. And then he posted another meme of her yesterday, and people that aren't even like not politically left or right, whatever, just like business people are like
business people.
This is, people that are like tweeting about like finance and econ and stuff are talking about how there's a stipulation in the clause where he's not, or a stipulation in the contract where he's not supposed to be like publicly criticizing executives of Twitter or Twitter in itself. So basically saying like the only reason
whoever thought of that clause, nice.
Yeah. Well, it's kind of like how in the Tesla clause, when he bought Tesla from the original founders, part of the contract was they cannot refer to themselves as founders, and Elon Musk must be referred to as a founder.
Really?
He put that in the clause.
Oh my
He
gosh.
put that in the contract when he bought Tesla.
Well, he was one of them, right? But he bought the other guys out, right? I thought
he wasn't there when it first started.
He wasn't there on day one.
No,
he was there like day 10.
Nah, I don't know.
Day 100.
All
right,
yeah, something like that.
All right, so we're going to talk about this more today. We're going to talk about Facebook. Randy from our news desk asked me at like 9:25 this morning, does Facebook close above or below 200 today? I said below. I said like mid to high 190s is where I thought Facebook would close. So far, I think last I checked, at least I'm right. It's at 200 right now. All right, that's interesting.
Wait, did you say above or below?
I said below. I said below 200 today.
For everyone saying they like my fit, this is a Benzinga hoodie. You can get it at swag.benzinga.com.
Wait, I don't think you can. Can you?
Oh.
Did we put those on the swag store?
I don't know.
Because I've had somebody else asked me for that hoodie because I wore them on the other day as well, and I couldn't. I don't know if it's there, and I don't even know if anyone knows where we got them.
Here's a pro tip: if you work wherever you work, if you work like in an office setting, for a company, get a hoodie or like a swag piece with that. With the logo of that company on it, and then you can wear it to the office if you ever want to wear a hoodie or something, and no one's like, "Oh, look at Aaron, he's wearing a hoodie today because it's Benzinga."
No, that doesn't work in like hoity-toity circles.
You don't think if you worked at like Goldman, you could just roll up in a Goldman hoodie?
Nope. Goldman would be like,
and you could say, "Hey, it's still Goldman though.
Get out of here."
Yeah, maybe Andy, we could do a giveaway. I don't know. We'll
see.
We
we haven't done trivia in a few weeks, and we're not doing trivia again today, unfortunately. But
maybe we could do like a guess the chart or
well, you missed. I did a good guess the chart last week.
Oh, did you add it to the swag doc?
No, because Jay Rice got it. Jay Rice always gets it. All right, we're gonna talk Facebook. We got to talk.
We're gonna talk Amazon,
Apple,
previews.
and Amazon.
Got some trades for those.
I want to talk Qualcomm a little bit as well. We'll talk maybe if we have time, we'll talk GDP. Oh, we'll talk ARK. We will definitely talk ARK today. I have some thoughts there, and that's our show as far as topics. We got a few guests as well. First guest is going to be Soon, Vivi, the Bio Queen, I hope will join us in a few minutes here. We're gonna have Hot Stocks Luke Jacoby back from Miami. And he's also in Toronto, I believe. He'll join us.
Multi-coastal. Bi-coastal.
Yeah, sure.
Multi-country.
We'll have Bernard George from Tornado on at 12:45.
Hell yeah, we will.
David Vincent from Cadre on at 1 o'clock. And I hope Sharon from HR will be able to stop by at 1:30, give us an update on her investing life. So that's the rundown of the show. Smash that like button, please, and thank you. And here we go.
This is Benzinga Live. Spencer Israel and producer AB.
What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a breaking news. So before we get to any of that, AB, have you seen the hype video for Fintwit 2020?
I have not.
Because I have not seen it.
If you're going to play it, I'm going to put my headphones
on. I'm going to be honest. I didn't even know it existed until this morning.
Okay.
Did you know that it existed?
No, but
okay. So I'm not alone.
Say it's hype video, and I'm in.
I'm not alone. I felt so bad for not knowing that this. I don't even know how long this video has been in existence for. But there is a hype video that we have. I want to play it for you right now because what can we say? We're pretty hyped for Vegas because it's 2 weeks from today. Well, I guess technically tomorrow, but we'll be there 2 weeks from today to like get set up and stuff. So if you're not sold on going to Vegas in a couple weeks to hang out with us for our Fintwit 2020 conference, check it out. That was a nice baseline. I enjoyed that baseline very much.
I like that.
All right, so a couple ways to learn more. You can go to that URL that it just said on the screen, fintwit2022.com. You can go to this link I'm putting into the chat. I just dropped that link in there. That'll at least tell us that you came from this show. Or just go to benzingaevents.com. But what I would say is if you're going to buy a ticket, I recommend getting a discount with the code BZYouTube20. That's what I would do if it were me. I would find a way to get a discount. I'm giving you a code. It's in the chat right there. I'll even put it on the screen for you. BZYouTube20. Where's my code? I lost it. There it is. BZYouTube20. It says it right there. Get 20% off. Do it. Do it, do it, do it. I had something else to say about this, but I don't remember what it was, unfortunately. Oh wait, I actually am told that the link that I just put in the chat, and it's also in the description, by the way, that specific link that's pinned to the top of the chat, that link gets you $200 off the ticket price. That bit.ly link that's at the top of the chat right there. There it is. Born to be free, let Rohan do the music. Did Rohan make that video? Rohan, did you make that video? The hype video?
Wait, what?
I did not.
No?
Is John talking about the play button behind us? On the window? We got that, by the way, for getting 100,000 subscribers. No big deal.
We're not far off from 200. You realize that, right?
Yeah, we are. Aren't we?
We're not that far. That's not that far.
Okay.
We're more than halfway there.
All right.
Yeah.
I like it. I dig it.
Dig it. All right. So again, fintwit2022.com or use that link in the chat and description to get $200 off. Okay, Facebook here. Let's bring up the chart. And Did you get a chance to look at the stock or look at the numbers at all, or do anything, or trade it, or whatever?
I did not trade it. So we talked about this yesterday, just with the bar being very low.
So low.
I-
The bar was below the floor.
And this is kind of a preview for my earnings plays for tonight. But I think the bar remains low across the board, and that includes for even a company like Apple, where the bar has historically been very high. Facebook here, right? I think what we're seeing is buyers coming in saying, okay, we're willing to buy Facebook at whatever it was at, $185 a share. For what it is, not for what it was in 2014 or 2015, but for what it is, right? It is an established, huge conglomerate of Facebook, Instagram, WhatsApp, Oculus.
Oculus is
not its biggest, probably its smallest, but it's part of the conglomerate. Saying that it's worth more than what the share price was. It was good that the users kind of bounced back up. It wasn't continued leaking of active users, so that's a good sign. And I don't think you necessarily have to have like crazy user growth for Facebook to maintain value here. I just think you need to show that it's not a rapidly sinking ship, right? If Facebook is a ship right now, people are willing to buy it with a few holes, saying, okay, this is not the most beautiful, most luxurious yacht out here, but it works. It's doing its job.
But it will not. It will not sink.
It will not. It looks like it's not sinking. Last quarter's report, it was holy shit, this boat's sinking. Now it's okay. We're not sinking. We're staying afloat. We might still be actively pumping some water back overboard that got in the ship, but we're okay right now.
Yeah.
And that's where I'm at on Facebook. So I don't think it's that exciting. I don't think it's going to zero.
Well, yeah. Facebook's not going to zero. Let's the people who think that, like I'm bearish Facebook, but Facebook ain't going to zero. Okay. What it has going for it is that, the stock is basically a value stock. We talked about that yesterday, right? Like if you're a value person, if you're someone that likes buying quote unquote cheap stocks that are traded at low prices compared to their earnings, right? Stocks with low PEs or low price to sales or price to earnings growth or EV to EBITDA, whatever ratio you want. Facebook is cheap, right? If value is your thing, Facebook is cheap. That's what the stock has going for it now. What it has working against it, and they talked about this on the call yesterday, which is basically they are a company in transition, right? The Facebook of today is not going, the Meta. The Meta of today is not going to be the Meta of tomorrow. They're basically undergoing this massive shift where they're investing crazy amounts of money in technology and in hiring people into Reality Labs. Reality Labs is their vision for the metaverse for VR, and they're not going to really see results from that for quite some time. So in the meantime, Facebook's business, Instagram's business is fine, and I think that's why the stock is up today, because it's not going backwards.
And one of the highlights was Reels, which of course we talk a lot about TikTok and how big TikTok is. So anytime that Facebook with Instagram Reels or YouTube with YouTube Shorts is able to cut into that market cap of TikTok, it's good for those companies. So those are basically my thoughts on Facebook.
Sorry.
Going into it, I wasn't short or anything because, like I said, we knew how low the bar was. We talked about Snapchat yesterday. When in February, when Facebook reported, it lowered the bar so much for Snapchat that when Snap reported a pretty good report, not amazing, stock went up like 30-40%. So,
Look, the bottom line is Meta is a company in transition. If you believe they can make the transition, then you should probably buy the stock. And they're not the first company to do a massive pivot. Netflix delivered DVDs to your house, right? That was their business. And then they invented streaming.
And I do think it is like, If there was a chart of my conviction that the metaverse was going to be a good investment for Facebook, it'd be a very bearish looking chart.
Yeah, be going down to the
Right.
left.
Like I'm at I think there's like a 15% chance metaverse ends up being as big as Zuckerberg thinks it's going to be. When if you would have asked me a year ago,
you would
or
have said 50.
yeah, I mean when there was like a second where, remember when the meta trade was on, it was everything from Roblox to Unity.
That was like for 2 weeks.
I know.
No, I could be convinced to buy
and then like a week after that was when Facebook announced it was changing its name to Meta.
Dude, and that was the top.
Yeah.
I could be convinced to buy Meta in a couple of years, potentially, right? Like I'm not buying it now. And on the call, like Zuckerberg was out at point blank, like, when are you going to see meaningful revenue from Reality Labs? And he said, not this decade.
Hey man.
So
I'd rather him be honest.
So,
all right, do you want to use this as a quick segue to talk about earnings tonight?
Yes, quickly. Do you have a calendar pulled up? And then I want to bring on Vivi.
I don't have a calendar pulled up,
Queen.
but I just really wanted to talk about Apple and Amazon and real quick my trades for that. So
I'll pull up a calendar.
I'm bearish for Amazon's earnings, and here's why.
Okay.
Here, I'll pull up my.
Wait, unless you want to table this until after Vivi, because we got Vivi here right now.
Sure.
Let's just bring Vivi on, and then we'll come back to your Amazon and Apple trades.
All right, that works well because I got to run to the bathroom anyway, so I'll let you run with Vivi for a second. Be right back.
We just started. How do you have to pee already?
I didn't go before.
Why? Vivi the Bio Queen. What's up, Vivi? How we doing?
Hello. How are you?
Doing well. How's your week going?
It was good. Can't complain.
Okay.
Can't complain. How are you, Spencer?
How's the portfolio treating you? Up or down or sideways?
Oh my God. BIOS. I told you, BIOS, XBI, BIOS have wrecked my portfolio for sure, but rebuilding slowly. Kept some, some stocks and got rid of some, but it's just a part of the game, right?
Are you doing like Kathy Wood, where she's consolidating into the stocks that she has the most conviction in? She's selling all like the stuff that that she kind of likes, and she's only keeping the stuff that she like loves. Is that what you're doing too?
No, I just sold some of the BIOS. I kept the ones. I did not add more to it. But I'm just like now playing, I'm literally just trying to swing, just buy a Tesla Leaps, for example. I get green, then I'll sell them, and then I'll buy them back. So that's what I've been doing, to grow my portfolio. But we do have some updates, like some crazy stuff that happened with the BCRX, right? It's been a while.
Oh, BCRX. All right. What do you got for us here?
So BCRX, it's a very interesting case over here. They are reporting earnings in May, and the reason that went down is, the whole portfolio was based on having that factor D pipeline, right? Like the whole basis of like that $100 a share was based on the factor D pipeline. So 3 weeks ago, I didn't see you guys. They announced that they halted enrollment. So which that means is they're not completely, they didn't cancel. The FDA didn't require. They just stopped enrolling more patients. So they're just observing because of some of the patients, they saw some creatine levels. So if you take the factor D pipeline out of the question, you still have Orladeyo that it's producing $122 million a share. It's doing a share.
Wait.
$122 million in sales.
Oh, okay.
I'm sorry, not share. $122 million in sales. Fair book value, I still think it's like $16, $17 a share based on a potential of Orladeyo. So now our eyes are on this study being unhalted, right? Because you just saw the Gilead had a halted study for safety issues, and then they unhalted a month later. So it's now everything is on limbo, right? I am still holding with because of Orladeyo, and then I'll make my decision later on. If they just have an Orladeyo in the pipeline, they can definitely either buy molecules or just be sold to a company, right? Like Takeda is their competition, so Takeda would be a nice one just to take over just that, that molecule. So everything is out in a limbo, but it's just to show you guys that how can you you pause a pipeline, and out of a one molecule it's supposed to create eight different products for eight different specialties. And look at it now, like that one halt has taken the stock 50% down.
Yeah.
So that is the update for that. And then I want to give you guys, actually on the flip side, the update on the ARDX, because that was one that, everybody bought it at $12 a share, and 3 successful trials, and then FDA didn't approve.
Yeah.
Remember, so now there's a lot of advocacy groups, a lot of nephrologists that wanted this drug approved because it's the only one that has a different mechanism of action. So there is an AdCom meeting next month that's going to decide. So I explained to you guys what an AdCom meeting is. It's pretty much when you go in a stage and you have the doctors fighting for the drug, you have the patients giving testimonials. So they set up their case, and then the FDA pretty much vote. So that's going to be huge for ARDX. I think there's a lot of advocacy.
What is the date of the AdCom meeting? Because that's going to matter for the stock.
That's going to be huge. I would have to look up, or you guys can just Google it because it was on a press release. Let me just see. I'll try to see if I can.
I have an idea. What if I went to Benzinga.com?
I'll see here really quick.
And I went to the tools, and I went to the FDA calendar page. Do we have ARDX? Let's see.
Okay, here you go. ARDX announces FDA plan to convene advisor meeting. So,
Yep, I see that too.
July
here.
20. When is it going to be?
It's gonna be June. Looks like June 28th. July 20. No, wait. No.
July was gonna be announced.
Yeah. I see that. Okay, I'm reading quickly here.
Yeah, me too.
I don't see a date though on this.
Yeah, there's a date. I know
There is
a month out. It's gonna be okay. Let me see here. Maybe I'll see.
It doesn't say when the date of the meeting is. I'm looking at this press release right now.
Yeah, but I know that there's a day here somewhere. I'll check it out and let you guys know. And then let me tell you what I'm doing. So this company wants to hire me. It's PHAT, and they have a PDUFA on Tuesday.
Should we hedge our bets in short, just in case?
What I did was I bought like 4 calls and 2 puts. You know what I mean? So if it's a flop, I'll make money either side. So I just did a little straddle, just for fun, just a lotto. But here's what I'm excited about this company. So this company has a medication for GERD. They haven't had one in 30 years. So imagine GI doctors, physicians are really looking forward to something that it's going to, because patients build tolerance. Imagine taking Nexium for 30 years, So it's a different mechanism of action. For example, the competition takes 2 to 3 days to work. This works immediately. So they're seeking an additional indication for fast, like if you're feeling the discomfort to take it right away. And so PDUFA is Tuesday. So I am looking forward just to, I will advance in interviews if it gets approved. So, and I wanted just to kind of be part of the game, just a little lotto. You know me, Spence, I'm a little bit of a gambler. I'm like, I just do a little straddle, couple calls here. They're cheap.
You definitely know your way around a casino, I think. Really.
Oh my God, yes, I'm a casino girl for sure. But that's about it. Do we have any questions at all that we can answer? I think I'm so bummed out about biotech generally.
I know.
Monday's gonna be hot again, and I'm gonna be like my mail is gonna be like blasted with questions, and people right now, the big, Sarisa Capital is down 60-70%. These companies are all like losing.
All right.
money.
Well, one ticker for you here. Trade Green wants to know about AUPH, Arenia.
Okay, AUPH. I actually hit my stop loss. I was pretty.
Okay.
I remember when all the way to 30 when there was talks about a buyout, and not anymore. I still believe that the drug is good, but who wants to stand that much of a loss, right? So I sold. I'm no longer on that company.
Okay.
I like the drug for lupus nephritis. I think they're a great candidate to be bought out because that's what they're focusing on. So
Okay. All right. Vivi, the Bio Queen, joins us every Thursday to just.
Yes. And
give us your
hopefully you guys
thoughts.
have more. If you guys just go on my Twitter and ask me questions. But like I said, let's wait for Bio to get hot again, and then we're gonna have a lot to talk about.
Tweet out the date for that ARDX meeting on
I will.
when you find it, because I
will
wasn't
tag you
able. It
guys.
wasn't in the PR. Yeah. All right. Thanks a lot,
Okay.
Vivi.
Thank you, guys. Bye-bye.
All right, now let's get back to what we were saying before. Aaron Bree has rejoined us now. AB, what were you doing on the Amazon front now? You were doing.
All right, we'll get back to that because I got distracted by something else. Do you remember the beat the streak game?
Yeah, I played it for like a week, and then I thought I'm bored.
Really?
Yeah.
So
because I could never beat the streak.
They came out with this game, the MLB did like 10 years ago.
Yeah.
Right. The all-time hit streak is 56 games from Joe DiMaggio.
It's true.
They said if you beat the streak, so what you have to do is pick a player. You can pick the same player, different player each day throughout the season to get a hit.
Yep.
And your streak ends if you pick a player that goes 0 for 3, 0 for 4, whatever. I used to play it like religiously when the game came out when I was like 14, 15.
It was streak for the cash, right?
Streak for the cash, yeah. Beat this.
Okay.
No, that was different. That was different. That was an
Right.
ESPN.
Whatever. This is
thing.
pre sports betting for us.
Yeah, exactly. This was like the closest I got to sports betting at like 15 years old. And I would get I had a couple times where I got like a 18, 20 game streak and was like, oh, I'm like a third of the way there. I'm gonna get it.
Okay.
I was just curious the other night and I like Googled if it was still going on. Still going on. No one's ever done it. Won the $5.6 million or whatever. So I started playing again. I have a 6-game streak going on right now. I'm like I don't know.
All right.
14th of the way there.
All right. Good luck, man. Keep us posted.
Yeah.
And then what happens if you get 56 right?
5.6 mil.
Damn.
Probably like, what is that? Probably like two something after taxes.
That's like one 5,000,000
Of an Elon?
of a Twitter. I don't know. Something like that. What was I about to say?
Oh, we were going back to Amazon Apple?
No, I know, but I had something to add, and oh yes, just speaking of games, real fast, and then we'll go back to Amazon Apple. I'm out on Wordle. I'm done. I'm shorting Wordle. I'm over it. No more Wordle. Here's why. The words are just starting to piss me off now.
Oh, I played last night. And
I haven't played Wordle in 3 days. I'm done.
A screw was your last one?
The word from like Monday was my last one. Monday or
That was a
Tuesday.
screw.
I'm done because I had the same letters in every single word, and so I'm done. I'm over it. Wordle. It was fun while it lasted, but it's gone the way of HQ trivia for me. I'm out.
All
okay,
right.
Apple, Amazon. What do we got for us?
I am trading. I'm going bearish Amazon into earnings. Here's why.
Okay. Bring up the chart.
Can I get a Benzinga Pro?
I'm working on it.
I don't need the chart.
You don't need a chart.
What I want to look at
is
I want to look at the numbers from last quarter.
Okay. From last quarter.
Yes.
Okay. So well, if you don't know it, guys, you don't know Benzinga Pro. It's our real-time news platform. I'm in the details widget. Okay. Then I clicked on calendar. Well, I'm not sure what you want though.
I want like the numbers they reported in February. EPS.
Okay. So it's probably more helpful if we go to news here.
Okay.
Right. And actually, I'll do you one better. I'm going to go to a news feed. I'm going to search for Amazon. Okay. And then I'm going to filter it for just earnings headlines. All right.
Okay.
And then, so we'll see, I'll do earnings and I'll do guidance.
Making this.
And then now these are earnings headlines for Amazon. And if we just scroll back to, right here, early February, right? Here's what we got.
Hold on.
This is all our coverage for Amazon of last quarter.
Getting a call from Houston, Texas.
Is it spam?
I don't know. Let's see.
Should you answer it?
Hello, this is Aaron.
Hey, Aaron, this is Ben Reynolds with Share Dividend.
Doesn't even tell.
Yeah, it sounds great. Can I give you a
Doesn't
call
even
back in a
tell him
couple
he's doing
hours,
his
actually?
show.
Sounds great. Talk
What are we
soon.
doing here? Wait, I've talked to that guy before.
Really?
Yeah.
Share Dividend?
Yeah, I've recommended that website on this show. I think it's a good resource for dividends.
Great guy. Sounds like.
All right, are we going to work with them?
To be
all right.
determined.
All
I was
right.
on a show, so I couldn't talk to him.
All right, fair enough. All right, let's go back to our Amazon thing. This is all of our Amazon coverage from last quarter in Benzinga Pro. The earnings per share, big beat, huge beat, right? The sales came in a smidge under. They guided light. Their sales guidance for this quarter we're in right now was, look at that. They guided 112 to 117 billion versus a $120 billion estimate. So they've already lowered the bar for themselves. Now, did they lower the bar before so that they can jump over it now? Maybe. So though at a high level, those are and there's more color in this article here.
So okay, and here's why I'm bearish.
So it wasn't great last quarter. It wasn't great. There were reports.
And
that's the takeaway.
And here's why I'm bearish Amazon into earnings.
Okay.
So like we said, we saw them lower the bar for this quarter. And why did Amazon do this? Because they know better than anyone else that they're facing all these headwinds when it comes to, supply chain issues, rising costs of transportation, labor shortages, maybe even some drop in. I mean, we just got the economic data today that the U.S. economy contracted more than it was expected to.
Yeah, wait. I'm looking at the reaction to the earnings.
It was the reaction to the earnings was good last time.
Yeah, wait. What the hell happened here on Amazon? So this crazy down day, that was because that was the day they reported, so the numbers weren't out yet.
No, it was.
But they closed down 7% the day of the day that they reported.
I think because some of the other big tech companies gave some bad guidance, and it was just dragging everything down.
Because then they
But
reported,
then Amazon beat.
and then the stock closed up 13%.
Yeah, and people were quick to point out that Amazon barely beat on revenue, and most of that, or not most of it, but a lot of the reason that they beat was because of their investments in Rivian, which was reflected in last quarter's earnings report. And so if you take that out of last quarter's report, not good. They lowered the bar. They're not going to have the Rivian investment in this quarter's report. So I'm bearish Amazon here. Just short term, long term, still long the company. I mean, it's hard not to be.
So how have you positioned?
I'm buying put debit spreads. So this is a stock that's
okay.
too expensive to trade just like straight up puts on.
Yes.
But what you can do, for example, so I have so I'm selling some 2,735, some 2735 puts, buying the 2740 puts. So basically, I want Amazon to be below I want it to be around 2,700 or below tomorrow after the report, and I'll effectively more than double my money, but not like 3x, somewhere in between there, kind of like a probably like 150% return.
Only. I think it's valuable to look at how the stock has performed. Not just last quarter, but after the most previous.
This is in all honesty, like probably a stupid bet. I remember last time I was also had puts into Amazon last report, and they beat, and like you said, and it was I was pissed because I was like, oh, it was all Rivian. Like you take out Rivian, like it wasn't a good quarter. I was actually right.
Yeah.
And I was like, I'm never gonna bet against Amazon again, and here I am doing it again.
I think I'm with Young Money. I just have a hard time betting against Amazon in general, even if the whole market is down. There's a difference between a company like Amazon, which the fundamentals of the business are still very strong, versus a Netflix where there's like a very clear slowdown.
The question is, out of Apple and Amazon, which one do you think would mean more for the overall stock market? Like a big.
Well, Apple's the largest stock in the.
Yeah, but you could make the argument that Amazon's seen as a more of a proxy, like for the overall.
I don't know which matters more. They both matter a lot. They both matter like a metric.
Adrian's bullish, Amazon bullish, Apple. Honestly, I would not be mad if they both beat. Both reports are great. That means the SPY is probably going to be up 2.5% tomorrow. Maybe that throws some of the kind of FUD out the window that we're seeing, and we'll finally get some buy-in coming back in. All right, guys, let me know how you guys are trading Amazon, or how you would if you're not trading it. You know, 1, if you'd be bullish, 2, if you'd be bearish. I threw mine out there. I'm not saying go follow it. If you want my honest opinion, it's as good as a bet on a coin flip. So, you know, don't go do this with some money that you need and come back and say, oh my God, you said that Amazon was gonna be down. I have no clue. That's how I'm personally betting it. I don't care. I'm gonna be honest enough. There's probably people out here that will try to you know, hide their positions. No, I'll be open with it. I am bullish Apple though. I'm buying some Apple calls, just like I'm buying the Amazon put spreads, and it's just because I think the bar's too low. I think the bar is too low for Apple. We've seen all these companies report all these headwinds. Apple has historically just beat and beat and beat on earnings. It's what they do. They're a cash machine. Literally, all they do is print cash. So if Amazon, or if Apple is able to come out here and just show that things are business as usual, they've been able to kind of weather some of these headwinds, I think the stock benefits greatly from that by just saying, oh, we're not you know, struggling out here. They don't have to say like this is the best quarter of all time. That's not the expectations right now. I don't know, Spencer, if you recall, like about a year ago or so, like it was at the point we had been in the COVID markets, in that like crazy COVID bull market for about a year. Mm-hmm. And Amazon, Google, Apple all reported literally record quarters for all of them did. Record revenue, record profit, all this, and all of the stocks traded lower after earnings because the expectations were just so high. We're not in that environment anymore. We're not in the environment where you need to report record. You know, you just need to show. Like, look at Microsoft.
Pull up the chart. Wait, I have a take I have a take on Apple.
Okay.
Before we get away from it, and my take is related to what Jay Rice just said. To my knowledge, and correct me if I'm wrong, but to my knowledge, has Apple given any new iPhone guidance since China went into lockdown like a month ago? I don't think they have, right? And if they have, then correct me, please. But I don't think Apple has put anything out there into the ether as it pertains to this most recent lockdown. So I suspect, this is my hot take for tonight, I suspect that Apple is going to lower their iPhone production guidance for the year. They kind of have to. Their factories have been shut down over there for a month, okay? But if they haven't said anything previously, then they're going to say it tonight. And if they do that, and I think they probably will, if they do that, the stock will get crushed. So I'm bearish Apple into this report, for the sole reason that I don't believe they've said anything yet about their most recent lockdowns. And those lockdowns, while not permanent, like they may end up being a decent buy the dip opportunity, those lockdowns will affect them today. JP Morgan says that iPhone sales are going to suck. No. I know the releases are in September, but they always give delivery guidance or production guidance. They always give production guidance, right? So I think they're going to give that, and it's going to be light. Luke Jacoby has thoughts. Luke, you want to share your thoughts? Okay, I'm going to get up and give Luke Jacoby the space here to. I don't. Do you agree with me or no? I don't know. Let's find out.
So Darren's saying that he thinks Facebook move was because Earnings weren't as bad as expected. He worries that Apple isn't currently priced for worse than expected earnings. So if they don't give amazing results, it can get ugly. I think that's fair. I think like what I was saying is that across the board, the bar has been low for all of these different tech companies. With that said, if there's any bar that's going to be held to a higher standard, it's Apple. So Apple does need to beat and substantially beat for the stock to benefit. But I'm just saying that at the end of the day, it doesn't need to report a quarter like it has in the past for the reaction to be positive. It just has to report a good quarter for Apple, not the best of all time. And let's face it, there's been other headwinds in Apple's history throughout the last 20, 30 years. They've always been able to come out on top.
But that's long term. Short term, I think they're in trouble. Lou Jacoby's phone just rang, and he has to take it. So he's gonna come on when he's off the phone. I don't know why he is taking a phone call right now, but he's Luke Jacoby. So I'm bearish Apple tonight. I think you may be right too. I think we both may be right eventually. You could be right a month from now.
I honestly, if Apple misses and the stock, if the stock goes down 5%, it will be terrible because it'll bring the overall market down with it. But I will see that as a strong buying opportunity for Apple. Right now, what are we at? We're at 161. If we got down to, we were down below 150, I think briefly in March. But if we dip back down below 150, I'll buy Apple there all day long, and I don't mind. Even if it sucks for a year and is that I'll know long term.
I just think like there's no way.
Did you see Twitter's making a move in the past?
Shit, don't tell me that.
It's almost as if like there's news out or something.
What? Don't tell me that. 49 making a move. This thing got below $48 today.
Yeah,
is that right? This thing got to 47. Wow.
I think the market is basically saying I think the market is saying we don't know about this thing. If Twitter gets down to
what, dude? Junaid called me on live trading. He asked if I was gonna buy Twitter again for the third day in a row. No.
I think
I need protection. I don't need more exposure.
I think there will be a trade set up though.
That's ridiculous.
Where if the stock gets down a little bit further, say to like $47 or something, that if I had a lot of capital sitting, say you bought like $10,000 worth of Twitter shares, knowing that you're just looking for the 15% difference in whatever the buyout price or whatever it is. So say 10,000 to make 1,500. And then you buy some cheap puts to where if the deal falls through, the puts give you some of your money back. So say the stock goes from 47 to 35, you still maintain like 70% of your initial investment, and then you make some money off the puts. You probably get back to around break even. Then the deal goes through, right. You make that money. There might be kind of an arbitrage trade setting up there.
All right, Hot Stocks Luke is here right now, so let's get him on the show. Want to give him an intro? Let's give him an intro.
Luke! Mr. Jacoby in the house. All right, Luke, first of all, before we get going on hot stocks, because I know we got a lot of hot stocks. Well, I don't know if they're hot stocks, but we got some hot trades. What, give me a highlight from Miami.
Oh, highlight of the Miami event?
Yeah.
It was definitely being a personal security guard for Mike Tyson, which I'm highly unqualified to do.
Oh, I saw you on the TMZ photos and the videos.
Yeah, you did?
You were escorting him through the,
Yeah, it was sweet,
all over
right?
the media. Yeah.
Yes. First time getting attacked by paparazzi, that was definitely a high.
Did you go? What was your like defense move with the pop? Did you go Heisman? Did you?
Okay, so here's the thing. It's like I was always critical when you'd see like Justin Bieber, like or like Kanye West, like smack a camera to the ground or whatever when the paparazzi are encircling them. It is scary. It's like all of a sudden we're walking at Mike Tyson, and they totally blocked us off. It's like you're literally just circled. You can't go anywhere. Like literally, you have nowhere to walk. You're like trying to do like the sideways cut through thing, whatever. It's literally 100% blocked. There's no pathway to cut through. And like it flipped through my mind. I'm like, what, do I have to just push this guy? Like, I'm not bothering anybody. I'm just trying to walk to the car. That's literally it. Just please, you got your photos. Let us walk to the car.
So here,
somebody else was like the crowd clear. Thank God. Again, that's not me. But if that happened to you, like if you're Justin Bieber and that happens to you every day, like 8 times a day, let's say, every time you try to go to the gas station to get a Monster Energy drink or whatever it is Justin Bieber drinks, right? And that happens to you. I mean, brutal.
Here are my thoughts on that, which this isn't an original thought. I've heard this somewhere else. The rule should be if the person with the camera or paparazzi is close enough. So say I'm the paparazzi and I'm close enough to you where you can hit the phone out of my hand without you moving. That should be fine. If you would have to like take a step toward me and come toward me, then that's on you. But if I'm invading your space to the point where you, without even moving, can just like hit the phone out of your way, then that's in your bubble. That should be fair game. So that to me should be the standard. Where if the person being harassed would have to come out of their bubble toward the person, then okay. But if you're right in someone's face and all they have to do is kind of swat you away, then that should be fair game.
Yep. I agree.
All right, Luke. So I think since the last time we've had you on the show, the markets have been crazy. When we flew down to
crazy bad.
When we flew down to Miami last week, I was pretty bullish. Things were sunny. The market was good. And then kind of.
All right, let's throw this one out to the crowd. While you're chatting, let's get some answers in the crowd. Guess how much SPY is down year to date. Don't look it up. No cheating. Just you got a number in your head. What percentage is SPY down year to date? And keep going, AB.
So when we were flying down to Miami, this was last Monday, right? I was like, okay, like we're bouncing here, we're having some good days, some fun swings, whatever. I have like my head down at the conference. We're working and stuff. I like go to check my phone one afternoon. I see the SPY's down more than 2%. I was like, holy shit. I couldn't remember.
There were a couple of those days.
In 1 week, Friday alone, I think the SPY closed down like 2.75% or something nutty, where I was like, I couldn't even remember the last time we had a day. Wow, someone's guessing 20%, a day that bad. And it all happened very, very quickly. Like if you look at just the last 5 trading days, so I see you're on the SPY right there on Google. If you're looking at just the last 5 trading days alone, it's like 5+. I want to say like 6% on the SPY in 5 days. That's a significant move.
Yeah, it's brutal. All right, and it was Robert Corneal. I think I'm reading that right. I got bad eyes. Okay, I can't see farther a little. Robert, is that? Oh, Carneal.
Carneal.
All right, Robert Carneal, 12%. That's the answer. We're down 11.6% on SPY year to date. Brutal. All right, let's do this one. One more for the group. 1 year. 12 calendar months. SPY up or down? That's the question.
Calendar
year.
Down? So we're going back last April.
Yep.
Okay, this is interesting. I remember last April people like joking about, SPY 420 on 420, but I think we were well below it. I think like we would have needed to have ripped to get to that point. So I think we were, say, around like 380 to now. I'm going to say we're up 6%. That's my guess.
All right, we don't have a ton of participators. Up or down? Throw it in there, guys.
Oh, you were just asking up or down?
Throw it in. Or a percent, whatever they got. Throw in the answer. We'll circle back to it in a second. And then here's the last thing that I'll ask, and then I'll get into what I want to talk about. But I'm like a fundamental guy. Right, I'm a fundamental and a news guy. Those are the 2 things that I know really, really well. If you're asking me to day trade triple Qs, that I'm not your guy for that. But if there's any stocks we want to take a quick fundamental look at, let's throw those symbols in the chat too, because we'll have a few minutes after I do my rants. Most of the crowd is going up. AB, what do you think? Up or down? 1 year, 12 months. SPY, SPY.
I already said up because I said I remember last year we were I think right below 420, around 420. I just remember people on like Twitter like joking about that. So I'm gonna say slightly up.
You got it. Surgeon's got it. Most of the chat has it. We are slightly up, up 1.2% over the past 12 months.
All right, wait, and here I got one for you. Guess how much money in net worth, or how much net worth Elon Musk has lost in the last week alone, last 5 days.
Oh.
And then I'm gonna go a step further, and I'm gonna give you some company.
40 billion.
I'm gonna give you some companies. Close, a little less than that.
How much?
Around 30, 35.
Oh, come on. That was a good guess.
It was a really good guess.
That was a really good guess.
So to put that into perspective, Coinbase's market cap, 30 billion. He's lost a Coinbase. DoorDash,
Wait,
market cap 29 billion.
120 Benzingas.
eBay, he's lost. Yeah, think about like the value of our whole
120
company. Just,
Benzingas.
losing that in a week. eBay, he's lost a full eBay. DTE, a full DTE. I didn't know DTE is like a $28 billion company. I just did a screener. I was like 25 to like 35 billion. No, crypto, 200 billion is like his whole net worth. But basically, yeah, Tesla's stock has drawn down 18% in the past week or so.
Yep.
And he still owns 172 million shares of Tesla. He's sold so Elon has sold.
God, I've never bought Tesla. I've traded options on Tesla. I've never actually owned a share of Tesla before. To buy the dippers on that stock always freaking win.
Yeah, and
Always.
I wrote that in so I was writing an article today about that, kind of saying Elon's lost, the value of like X company. The one thing you can say about the stock is like, for people that have been in this a while, this just happens with Tesla stock. It'll draw down 20%, it'll come back, it'll draw back again, it'll go up. I bet there are a lot of Tesla long-term investors that aren't even worried here with this dip because they've been through it before.
Yep. All right. Let's get on to some names. I saw one in the chat, Roblox. Let's look at that in a second. But let's talk about Hood. HOOD. Again, going back to my roots. I'm a fundamental guy, I'm a news guy. Those are the two things that I think I know is as good as anybody. Hood, let's talk about it from the news perspective. Can you pull up a chart?
What do we want? Dailies?
Maybe let's do 5 days. How's that?
1 week candles.
These are weekly candles?
Uh-huh.
Sorry, give me like 15-minute candles. I wasn't clear. I want to look at like 5 days worth of chart.
Okay. I was like, I've never heard someone refer to the weekly candles as 5 days, but I guess that's technically what it is.
Yeah.
That's how much is in a trade.
All right, so about halfway through our chart on there, what do we see? We see a big red candle. Keep going right there. Boom. Oh, no, it's disappearing. But the point that I want to bring up here, zoom in a little more, AB, so we can see.
I'm trying to find that. I'm trying to get my bearings on the date. So this is like a week ago. All right. So here, this is the last week.
There we go. All right. So right towards the middle of the chart, maybe 60% to the right. We see that red candle down. What happened? That was Robinhood announcing their layoffs. Basically, Robinhood came out. They said we are going to reduce our workforce by 9%. Reason that they gave was that as they scaled up so quickly, there were duplicative jobs, etc. And so here's what I think is interesting. This is getting from the news side of it. Okay, this announcement came out on Tuesday. Robinhood is reporting earnings 2 days later on Thursday. So as a company, Robinhood had the decision to either separate this layoff news from their earnings or report them both together. We've seen companies do both time and time again. I would say that it's more frequent that we see the layoff news come with the earnings report when they're that close together. I'd say that's the more common pattern that we see on the Benzinga news desk here. So then I get to thinking, okay, why did Robinhood decide to dump this news separate from their earnings report? Their earnings report is only 2 days away. They can just get all of the news out at once. Here's my thinking right now, AB, and I want your gut check on this, and I want the chat's gut check on this, because I haven't taken a position yet. If I were to take a position into earnings today, here's what it would be. Robinhood chose to separate the bad layoff news from their earnings because they think that the earnings report is going to be good and strong. And so they wanted to get the bad news out of the way So that way the market then focuses on their earnings report, which is coming out today, rather than all the headlines being about the layoffs. So it's not like the idea would be bad news, layoff, good news, earnings, separate them so that way the momentum picks back up with the earnings report. I think that if the earnings were going to be bad, then it would be, bad news, layoffs, bad news, earnings, you put them together. So that's my thinking there, and I'm curious where everybody else is at. Does that line of thinking seem to make sense? Because again, it's more common that we'll see when they're that close together.
So Luke,
that they'll be separated. And I see Andy. Wait, hold on. And I see Andy Y in the chat saying layoffs are good news for stocks. So I typically agree with that. But there's cases where they're not, and this is one of them. Because this is a high growth stock. Any stock that's a high growth stock, and that's the story and that's the narrative behind the stock, you don't want to see the layoffs, right? That's a signal that the the growth is slowing. If it's like a big industrial stock, then they found some efficiencies, they're reducing their workforce by 5%, nothing changes, they reaffirm guidance, then you get that nice stock pop. So I would agree that generally layoffs cause an increase in share price, but in these high growth company cases, I think it's definitely worrying.
I love that line of thinking. I think it's very intuitive, very astute observation to say, okay, typically when we have earnings reports, this is when you bring out big news. And at the end of the day, laying off 9% of your staff or whatever it was is big news. And it would make sense to decouple that from positive earnings. You don't want to wash out a good earnings report with people saying, yeah, but they're laying off 9% of your staff. With that said, I just don't see how in this environment, Robinhood possibly says anything. I'd be shocked if more people in Q1 of this year were going into Robinhood than leaving, So is there also a chance maybe they said our report is going to be bad? Maybe we don't want to drop that and the fact that we're laying off 9% of our staff at the same time?
Yeah, I mean, and that's what Darren's saying in the chat. Is he thinks it's just to soften the blow of the earnings report, which it could be. And again, that's why I don't have a position yet, and I sort of wanted to play this one out.
No, I'm saying I loved your line of thinking. I think I'm just saying, I guess it could be possible that it's what Darren is saying, and I guess what I'm saying too is that it's possible they're saying we don't want to put this all out there at the same time. That could be like catastrophically bad. Whereas if we just kind of put this out now, let's get this out of the way, and then we'll deal with the earnings report when it comes.
Yeah. And let's do this too. So Panda in the chat is saying let's look at the expectations, which is that's important context. So I did look at the numbers. Last quarter, Robinhood put up $362 million of revenue. $362 million of revenue. This upcoming quarter, the forecast right now is for $355 million of revenue. EPS, I don't think we really need to worry about. It's all going to come down to the revenue number. And then I saw somebody else saying, why is Facebook up, even though it missed revenue? Facebook is up as the user count, which is going to be critically important for Robinhood as well. Facebook reported that their users, their monthly active users, that's the term that we use for all these software companies. We call it MAUs, monthly active users, how many people are logging in every day. Facebook's monthly active users were up. We already had the news out that there's monetization issues. And so that's why Facebook popped today.
Real quick before we can talk about more Facebook too if you want to, but I have one last final thought on Robinhood here, looking at these numbers, Luke.
Yep.
Even if Hood and I know, I mean, looking at Hood's chart, right? It's just been a dog. Like it is so beaten up. And what's interesting too, and we can talk about this, is a lot of these companies that we've seen, especially in like the fintechy space, have gotten crazy valuations on the private market before they come. Like Robinhood, I believe, was valued at like a $10 billion company privately. Or no, it's still an $8 billion market cap. But look at Coinbase, for example, on the private market was valued at a 50 or 60 billion dollar company, now a 27 billion dollar company. I wonder if that's gonna, kind of get some of these investors that are in the early stages worried at some of these like kind of crazy sky high valuations.
100%, absolutely. There's no doubt about it.
But going back to these hood numbers, here's what I noticed looking at these, Luke, is that even if Robinhood beats, which the stock in the short term will probably will most likely go up. If say Robinhood reports 360 instead of 355, they were reporting 520 like the same quarter a year ago. That's not what you want to see in a growth stock.
Yeah, no, but that's fine. That's fine. It's about the user count. More importantly, what was the 520 on? It was on the crypto craze.
Right, Dogecoin.
Right?
Yep.
It was about crypto going crazy.
Why is everything going up, Andy asking? It's a good question. Let's take a look at the overall market.
Yep.
I mean, everything's been so beaten down that you're gonna have bounces here. So oh wow, this is a good move though, Luke. Look at this. 10-minute candles. Can we get back to the highs of the day from this morning? It's looking like we're trying to.
And let's just close this one out in the chat, guys. If you had to pick one way or another, you're not sitting on the sidelines. There's no neutrality. You got to pick. Going into battle, Robinhood. 1, if you like it long, into the earnings report today. 2, if you like it short. You don't have to actually make the trade. Just give the gut check as to where you want it. Right?
Yeah, guys, and let us know also in the chat if you've got any stocks you're watching. So, Luke, we've hit on Hood, we've hit on Facebook. What is the next stock on our hot stocks list?
We didn't really hit on Facebook. I still think that Facebook is an incredible opportunity. I think Facebook is an incredible opportunity.
Now up 16% today.
I'm long it. I'm not down on my position, I believe. Let's see. All right, how about this, AB? If you guess the dollar amount that I'm up or down on my Facebook position right now,
then I get the position.
Yeah, I'll give you half. We'll split it.
All right.
You want to take a crack?
All right. So you bought it after the OG.
Oh, I'm break even, baby.
Oh man, you just told me.
Sorry, it took too long. Down $389. Let's go.
Man, look at Apple making this nice move into earnings. Up now almost 4% today. Is that a fake out into earnings, or you think that's people coming in here buying, saying this stock's cheap or cheaper than it should be, and we're expecting a good earnings report?
For Apple?
You got to go one way or the other. Yeah, we're up almost 4% now with still a couple hours left in trading before Apple reports.
Yeah, but Apple's the only like investable FANG stock for an institutional fund right now.
Amazon reports tonight too. I think Google too. I mean, I think they're all investable. But Apple is the cream of the crop for sure. The top.
You're right. Google's investable for those big funds. But Facebook, let's just talk through it really quick. I still think Facebook is an incredible opportunity. The stock is trading at less than 5 times price to sales. Forward price to sales 3.6 times. Incredibly cheap. Forward PE 14 times. And we're talking about a company that generated $58 billion of cash flow in the past year. $58 billion of cash. That's not any sort of paper earnings or stuff that they can use to mess with it. $58 billion of cash. So I still think that Facebook is an incredible opportunity. It's my largest individual stock position right now. And like we said, I'm back to break even on it. I'm not buying more. It's already a very large position for me. But I think that Facebook is still an incredible opportunity.
All right, guys. So
Roblox, do you want to do Roblox really quick?
I feel like I don't know. No, I've just been wrong on Roblox so many times. Like I've got the chart pulled up right now. We're looking at dailies. This stock IPO'd a little more than a year ago, so it's been on the market for about a year. Opened up around $60, ran up to around 100, came back down, ran all the way up to around 140. This was in November, Luke, when kind of the whole metaverse craze was going on. You had people buying Unity, Roblox, Facebook, basically anything that had Nvidia, anything that had any exposure to the metaverse. Facebook renames Meta, all this. All these stocks have come out of favor. Roblox's stock has come from, in less than 6 months, $140, now down to 30. 140 to 30. So that is as big of a drawdown as you're going to see on the market. I don't know, Luke. What else can you say about it looking at this chart?
So here's what I'll say about Roblox. And I'm going to take my fundamental lens. Roblox is about as expensive as Facebook. Let's put it that way. So if you're looking at it from a valuation perspective, and it is tough to do because Facebook is so much more mature of a business, it's throwing off way more cash flow, has more earnings, etc. But if you're looking at it from a pure fundamental basis, Roblox and Facebook are about the same price. In order for Roblox to sustain the price that it's at now, it needs to hit some pretty decent growth targets. So in order for Roblox to hold 30, it needs to grow sales from 2.9 billion to about 3.5 billion over the course of the next year. That's not a crazy number. That's about 20%, right? That is a lot of growth for a big company like this, but it's not like it's an insane growth number that they need to post. But that's the reality of the situation. So I guess the question that I'll ask AB to our audience is, if you're long Roblox, you need to believe that the company will increase sales from 2.9 billion to 3.6 billion, 3.5, 3.6. If the company achieves that, then the price stays at least 30. The company outperforms that, puts up 30% revenue growth, then you have room for the price to go higher. What am I basing that on? At the $3.6 billion of forecast revenue for the following year, that would put the stock at about a 5.5 times, 5 times price to sales ratio, which is an okay number for this stock to trade at. There is room for multiple expansion, right? I wouldn't be surprised if a stock like this traded at 10 times sales, but 10 times sales is not a long-term place where any stock stays.
Yeah, I mean, here's my thing, and I talked about this earlier with Facebook. If you would have asked me 6 months ago how convicted I was that the metaverse was going to be kind of an everyday thing, something that's investable that we want to invest in, I would have said, not 100%, but pretty high. Now I'm like, I don't know. Like, I don't know if in 5 years we're talking about Roblox being a virtual world where like kids are playing every day. We've talked about the F word before, Luke. A company being a fad. You never want to be a fad. Like
PTON.
Peloton. Yep. Potentially.
That's my favorite stock that I love to hate.
Celsius.
Peloton.
Could that be a fad?
Oh, dude, Celsius is not good. No.
But is it a fad?
I think if anybody is still in this stock, they're in for pain.
All right, yeah, we'll talk about.
You think so or no?
I'm not in on Celsius. I was always in the boat that, and I said this when.
All right, let's talk to the chat. Everybody has to participate. When people don't participate, I don't understand why. You don't have to actually make a trade.
Yeah, no.
But here are your options.
No Switzerland.
You can own Roblox, you can own Facebook, or you can own Celsius. Those are the three. And I hate that mine is Facebook because it's like the most boring stock in the world. But it's not like I'm a, perma bull in Facebook. I bought it after we had that earnings sell-off. I think it was 2 quarters ago, and the stock kept going down. I saw Facebook's trading at 5 times, less than 5 times price to sales ratio. I take that all day.
All right.
Company that throws off $58 billion in cash a year.
I might really present it with that option. If you gave me real money and I had to invest one, I might choose Facebook. But since you just did for this purpose, I'm going to go Roblox. You want to hear why?
Yeah.
Because Roblox and Meta are both betting on the metaverse. If they're right, which one's going to benefit more? Which one's going to appreciate? Roblox from $30 or Facebook? Which one's going to appreciate more? I'm going to go with the growthier, more beaten down name, Roblox.
All right. So there's a lot of Facebook. There's a lot of Roblox in there. All right. How about this one? Let's do our dogs. Peloton or
those
Celsius?
Weren't dogs.
Peloton or Celsius?
Oh man.
PTONCELH.
Again,
They're both stocks that were red hot.
two
They both have fad concerns.
two similar industries.
If I pick between the two, I'm picking Celsius.
Me too.
For me.
Two similar industries again as well, right? You have like these kind of fitnessy, right? The last example we did Roblox versus Meta, which both are investing in metaverse. These two are both kind of in the fitness. They're both in like the influencer space too.
Yeah, I mean, so for both Peloton and Celsius, you can throw out. You shouldn't throw out. But the fundamental situation for each stock is whatever. Really, it comes down to, are they going to get sales growing? Is revenue going to go up? General thesis on fitness that I have, and I've shared this time and time again on this show for years, is that fitness, anything, is really, really tough outside of physical gyms. I mean, you can go through all the stocks that we have. Physical gyms work. Outside of that, it's really, really tough. So I think that makes Peloton a little tricky. Celsius is a company that I know better. I mean, even if Celsius starts to consume less mind share of its market, which could be the case, they still have a lot of growth channels available. They still have a lot of distribution channels to set up. They still have a lot of non-US room to run. And so there's just some of this natural expansion that is still developing and will hopefully help deliver some sales growth.
I never realized this happened. So Lifetime was public, then went private, and is now public again. I didn't realize that happened. It looks like as of last October 21. Planet Fitness, I just looked at the stock, has done all right, but I don't know if there are a lot of examples of gyms that have done well on the public markets.
No, there's just not a ton.
Real quick, Luke. So we have our next special guest here, Bernard George. He's running a very cool new brokerage, Tornado. We're going to talk to him about that. But real quick, before we get to Bernard, I saw a question from Maya in the chat asking about Apple's buyback program that the company is expected to announce tonight, and just thoughts on that. So basically, the consensus is among kind of Wall Street experts and analysts is that if Apple reports kind of an underwhelming report with the buyback and with an increased dividend, it'll just be seen as kind of a wash. The stock may be trading down 2-3%, whatever. If they're able to announce that buyback with a strong report and maybe they issue some strongish guidance, then that's when we could see the stock really rip, right? Because then you're getting multiple positive catalysts. You're getting the fact that Apple was able to weather the storm when it comes to inflation, supply chain issues. You get the positive. Go ahead.
No, keep going.
I was just gonna say you get the multiple positive catalysts. You get that they had that they had a good quarter. That you get the buyback, you get the increased dividend, and you get like good guidance. Then you're hitting all the boxes. If that all happens and the stock's still trading down, then I don't know what to do. I don't know.
Yeah. So let's talk about that for a second. So Apple earnings tonight, dividend buyback. And I know you have your interview with Bernard coming up in a second, so I'll keep it short. But AB, we're not going to survey the chat, but just follow along. Everybody is talking like these are shoo-ins, and they very well may be. Apple has a lot of cash on hand. It has $64 billion of cash on hand. How much cash do you think Apple had 3 years ago?
How much do you say they have now? 60.
Right now they have $64 billion. How much do they have 3 years ago?
100.
Pretty much $95 billion.
Okay.
Right. 1 year ago, how much cash did Apple have?
150, 200.
They had 62 billion. Now they have 63, 64.
Okay.
Right. So here's what I'm saying. It's not like they have so much cash that they need to take it off of their hands. Apple's had significantly more cash before. The amount of cash that Apple has over the past 5 years is down. It went from 77 billion down to 64 billion.
Wow, that's surprising.
Right, from over the past 5 years. So it's not like this is a company that isn't used to having all this money.
Yeah, because I remember that from a few years ago. That was like the number one thing people would talk about. Is like, look at Apple's balance sheet. They are literally sitting on more cash than like half these companies that are traded. More than half these companies are traded. Their market cap, Apple's sitting on in cash. So that's always been just like, what is Apple going to do with all this cash? So again,
all right, AB, I'll let you get to your interview with Bernard. All right, I've been holding up the show long enough. I haven't met him yet, but I heard from our team that he's awesome and they're building something very special there.
Fintwit. Fintwit's going to be awesome. Yeah, why don't you hang out with Me and Bernard.
All right, Vegas. Be there or be square. If you just want to sit with me and talk stocks all day, I'm gonna be doing that for 2 days. Las Vegas, Nevada, May 13th. Okay. Let me give you my email address. It's Luke Luke at benzinga.com. Luke at benzinga.com, and I'll get you hooked up with some special pricing on passes. It's not like they're expensive. I think it's $300 to go. You get all your meals paid for, and entertainment, education, etc. Like there's, if you spend all this time watching YouTube and all this time trading and investing, there's literally no reason why you shouldn't come spend 2 days to hang out with all your friends. So Luke at benzinga.com. That's my email. Shoot me a note and I'll get it hooked up for sure. It's gonna be a blast and super useful.
Hell yeah. All right, Luke. Well, if you want to, you're more than welcome to hang out with Bernard and I. If not, I'm going to go ahead, and as soon as he's ready, gives me that thumbs up, bring him on, give him our special intro. All right. Let's go ahead and get Bernard from Tornado on the show. Mr. George, how you doing today?
Hey, good. Thanks for having me on.
Thanks for coming on. Thanks for taking time out of your busy Thursday to join us. So before we get started, right, our audience is mostly retail investors, day traders, some institutional. I know there's some big dogs out there. They probably don't want me to say which big banks they're at, so I'll refrain from that. But can you just explain to them what Tornado is, what you guys are kind of doing and building over there?
Yeah, absolutely. So by way of background, Tornado is a modern web and mobile brokerage. We empower anyone who aspires to become a better investor with content and community. And if you think about the investing landscape these days, there's almost a crisis in investing education. Every week we see these headlines about young investors gambling on penny stocks and options and even bankrupt companies.
That sounds familiar. Sounds like someone I know.
Hey, don't look at me. I just
All right.
And our belief is that the only way to really solve that problem is to make smart investing highly engaging, so it becomes that path of least resistance for people. And this mission of financial wellness has never been more important.
So Bernard, I'm on the website right now, and I was on here earlier, and this is something that I thought was interesting with all these different brokerages out there right now, right? It seems like obviously Robinhood's the biggest and the one that kind of revolutionized the space, you can say, are doing this, free model, no commission free trading, all this. Not a lot I've seen have a monthly fee. Why go the monthly subscription route, and what does this get customers?
Yeah, it's a great question. So as we've all come to learn, free trading isn't really free. It comes with a lot of conflicts and a lack of transparency. So payment for order flow, which is a model a lot of these brokerages rely on, creates these unfortunate incentives that encourage a lot of trading. And it's not just a high volume of trading. It's trading in particular stocks, like risky penny stocks and options, where the payment for order flow rates are the highest. So we don't rely on payment for order flow. It's less than 1% of our revenue. And trust is a key factor in our business model. So our transparent subscription model really does align incentives with our community. And it enables us to create a platform that's really laser focused on helping long-term investors make smarter investing decisions.
Wait, can I just jump in for a second?
Of course,
because this is the first time I've seen this model, if I understand the website correctly. You will pay me for learning things?
Yeah, it's a great feature which we have launched recently. So as you know, investors are hungry for ways to learn about investing in a way that's really personalized to them. So we recently launched Learn and Earn, a financial wellness program that rewards people for learning about investing. So it's a series of these bite-sized educational building blocks that help anybody level up their investing. So you can learn up to $50 to invest as you learn about topics like risk, diversification, compounding, portfolio optimization, valuation, and more. So already over 500,000 lessons have been completed. And our goal is really to catalyze learning and help investors of all skill levels just take that next step forward in their journey to becoming a better investor. It's kind of our way of saying invest in yourself and we will too.
So what can you trade right now on Tornado? Everything,
Yeah.
or are there limits?
You can trade stocks and ETFs.
Okay.
So Bernard, something I'm curious about right now is obviously with this recent investing environment, it's been tricky. We've seen a lot of brokerages, Robinhood included, kind of hemorrhage users. Do you see this as maybe an opportunity for Tornado, saying, okay, look at all these people burning out, deleting their brokerage accounts because they didn't have the education, and saying this is where we can kind of step in and prevent things like that from happening in the future?
Yeah, it's been a really interesting environment in the retail investing world. And as you guys have seen and covered, last January, the narrative around community and empowerment popularized investing like never before. It's really drawn in so many people who otherwise might not have been interested in investing. And everybody has a unique starting point. People get into investing for a lot of different reasons. Sometimes it's part of feeling like you're part of a movement, or a product you love, or tech that excites you, or traditional financial reasons like returns and dividend income. But everyone also has a really unique destination, and our goal is just to help people continually take that next step in their journey to becoming a better investor. And investing is just such a powerful life skill, and so it's important to start investing, but it's also important to never stop learning and always continue to evolve your process.
Go ahead, Spencer.
I just wanted to ask. My question's like not a serious one though, so why don't you ask if you have a serious one? Because
I was just gonna ask: is it fair to say, and I could be completely off base here, and if I am, please correct me, and I apologize for my ignorance. Is it fair to say that Tornado is more so geared toward people that are kind of investing their money and building their portfolio, rather than people that are day trading, like high volume trading day in and day out? That makes sense?
Yeah, so we're a community for longer term investors, and it's actually a really large underserved segment of the market. And this kind of comes back to some of the financial incentives that a lot of players out there have. So a lot of brokerages are encouraged to sort of get people to trade a lot. But it turns out that the vast majority of investors out there tend to think of themselves as long-term investors. So we're sort of stepping in and creating an environment where long-term investors, regardless of the skill level that you come in at, can always level up and continually learn in a really personalized way.
How did you end up with the URL, the domain name tornado.com? I cannot believe that wasn't already claimed by somebody or bought.
Yeah, no, the name Tornado sort of represents this powerful confluence of ideas and community, people coming together in a way that's sort of transformative, and an energy that that's sort of you think about financial fitness. It's almost like there's so many analogies between financial fitness and physical fitness. Both are so good for you, but also can be so exciting and so energetic and entertaining. So that's sort of the thinking behind getting tornado.com.
And then, if you guys don't know, Bernard has Mark Laurie and Alex Rodriguez as investors in his company. So if that doesn't make you excited to check it out, I don't know what will. Do you have any good stories from pitching those guys?
Yeah, Mark and Alex are incredible, and I think the common theme that has drawn them together and brought them to invest in Tornado, and as well as a lot of our other investors, is this mission of advancing financial wellness. It's something that they're both super passionate about. Most people know Mark Laurie as the founder of Jet.com, a serial entrepreneur, but a lot of people don't know that prior to being an entrepreneur, he actually used to be a risk manager on Wall Street. So he has an intimate knowledge of a sophisticated how to think about financial markets and stocks and risk in a very sophisticated way, and how to sort of bring that to to retail customers. And Alex, similarly, is super passionate about financial wellness. Early on in his career, he took a lot of care to, plan his financial future, build up his skills as an investor, and he's almost become this perfect financial role model for a lot of young athletes and influencers out there, and also young professionals everywhere. Just having that foresight to build those skills.
It sounds like a home run. Hey, if our stream deck worked, I would have a drum. It doesn't work. It's not turned on though.
What the heck?
Anyway,
What the heck?
Rohan, fix our stream deck, please.
Very
Bernard George,
nice.
CEO and co-founder of Tornado. Check it out, tornado.com.
Yeah, Bernard, we're big fans of what you guys are doing, and I also wanted to
keep
throw
on
out.
keeping on, man.
I also wanted to throw out there, we are also trying to kind of up the level of good, accessible education out there for people that are interested in finance. So if there's any way, we can kind of collaborate on that, we'd be happy to.
Awesome. That sounds great. Yeah. Thanks so much for having me on. Really enjoyed it.
Of course. Enjoy the rest of your Thursday.
You too.
If it helps, I grew up a Yankee fan. I don't know if that greases the wheels at all, but anyway, I'm rooting for you, because anything that helps people get into the markets and start investing from the younger age, I'm all for it. I'm all for it.
Hell yeah.
So you're fighting the good fight, man.
Absolutely.
All right.
Have a good one, Bernard.
All right. We have to transition here to our next guest. We're going quick here. There's so many things we haven't gotten to yet, but we have to get to our next guest right now. David Vincent, who investment product specialist at Cadre. If you've been paying attention the past few weeks, we've been doing this recurring segment all about real estate, where we've been inviting David on the show to talk about how real estate behaves as an asset class, what makes it a compelling investment right now, what sort of things to look for in a real estate investment. The other week we spoke about things like IRR and things like that. Today we're going to run through a couple of examples of recent Cadre deals. We're also going to recap some of the things that we covered in previous segments. So let's bring on David Vincent from Cadre right now. Mr. Vincent, welcome back.
Hey, Spencer. It's good to see you again.
Good to see you as well.
You didn't catch me dancing during that opening segment there. I love the music.
No. I did not. I did not catch you dancing. So let's start with this, David. I kind of teed up the theme of the segment here already, but we've already covered sort of the fundamentals of real estate to some extent, and some of the things you need to know. But we haven't talked really about like recent examples of Cadre deals, and also even just like what's happening in the market, like in terms of like individual markets right now, like individual cities and what's happening. So let's just start with maybe some of that right now. Can you just walk us through a recent example of a Cadre deal and how the whole thing kind of happens?
Absolutely. And so what's great about what's been going on in this market is we've been having a lot of opportunities to sell assets. So we're obviously thrilled about that when we can realize those gains for our investors. And it's always nice when you can look back to the beginning of a deal and talk about kind of the whole life cycle. So today, what I was thinking about is this deal. It was down in Orlando in Winter Park. As you know, I was just down there, Universal Studios. It's a great place. So this is Solis at Winter Park. It's a multifamily apartment complex. And we bought this as an off-market transaction. And I think that that's something that, you hear a lot about. It's not the easiest thing to do. And there's various reasons why sellers want to sell in off-market transactions. But for us, it's part of our edge, right? Finding deals, sourcing opportunities that other people aren't competing against you. Usually you can get a better edge in pricing, but also have an edge in getting a deal that other people don't see. And so here, this was with a partner of ours, True America, on this transaction. And this was, a property in Winter Park, in suburban, kind of neighborhood in Orlando in Florida. And we got this at a significant discount to replacement cost. So what that really simply means is if you were to rebuild an identical asset today in a comparable kind of location, it would cost a lot more than what it's going to cost us to buy it. So that also has an impact on supply demand. and whether or not there's new supply coming online. So always a good thing when you get off market, you have a experienced quality partner that you're working with, and also buying it at a discount.
I just want to add about the off market thing, because I think that gets at a misconception, and one of the things that, you know, and I'm certainly in this group as well. Anyone that is remotely interested in buying a home right now is looking for scapegoats as to why a housing market is so crazy, and one of those scapegoats is investment firms like Cadre, also firms like BlackRock, right, and private equity firms, right? And if it wasn't for that darn BlackRock, I would have been able to get that house. But in reality, what's happening is those firms, including yours, you're not going into the market. You're not bidding against me, right? You're going straight to the developer. You're even going off market, right? So there is a difference there.
Yeah, and generally speaking, right? So these aren't condos, this particular deal, right? So these are rental apartments.
Right.
So someone who's looking to buy a single family home wouldn't be buying this property anyway. But I think that's a good point. And what's interesting is there was recent data that got put out there on the percentage of single family homes that were bought by investors. And I think it was originally flagged as institutions. That created a lot of buzz, a lot of headlines. The author of that original report has since come back and clarified what they were doing wasn't identifying that it was BlackRock or someone like that buying these houses. It was anyone who owns a house already. So people buying a vacation home, a lot of mom and pop businesses, people that own homes in their neighborhood and rent them out. And also short-term rentals are a big thing. So not areas that we play in by any means. And generally speaking, we focus on more what you would call workforce housing. So more on the affordable scale as opposed to pricing people out of their homes. It's something that we're very committed to improving the neighborhoods that we, work in.
So that's how you get into the deal.
Yep.
How do you maybe, like, what goes into the thought process of an exit?
Sure. Well, before you get to the exit, right, you have to have a business plan. So generally speaking, I think this is a great example of what I think of as like a classic Cadre multifamily value add play. So value add is a term you hear a lot in real estate. In this case, this was a pretty significant renovation program that we had. First of all, we rebranded the asset. We did a lot of renovations. Renovations are pretty obvious, right? So you're replacing the countertops, you're replacing the flooring, putting in new appliances, that type of thing. But also sometimes, doing the lobby or the common areas, redoing the pool. And then the other side that I think a lot of people don't think about with value add is cost reduction. So when we can institutionalize the process of managing the asset, bring expenses in line with the market, or maybe the prior owner of a deal, and I'm not speaking to whoever we bought this particular asset from, but sometimes the prior owner isn't institutional. So their expenses are too high, they're not charging market rents, and so there's two different levers for you to pull. And this is a good example where we pulled all the levers. We created a tremendous amount of value for this. And so with this asset, we were targeting, which is in line with our normal underwriting, is about a 20% return on cost per unit for renovations. So for whatever we're putting into the units, we're hoping to get back a return on cost of 20%. In many cases, recently, we've been able to outperform those numbers, and we're thrilled about that. So here, this was something, generally speaking, when we buy an asset like this, we're looking at maybe a 5 or outwards to a 7-year hold period. Sometimes the market gives you an opportunity to sell an asset a little bit early. And this is an example of one where I believe we did sell this, in about a little over 3 years. So this was earlier than our initial exit that we had planned. But part of it was strong growth, strong performance on the renovation program, the value add program, reducing the cost. We created a lot of value. The market tailwinds gave us a lot of value. And we saw that rent growth was really taking off. Some other deals in that market were trading at, under what's called a 4 cap. So going back to my prior example of a bond, and that's the yield. So as prices go up, yields come down. So yields were coming down, or cap rates were coming down in assets. There was a lot of demand. Okay. So we saw a great opportunity to exit the deal. And that's what we did. And you can see the numbers right up on the screen here. Now, I will say it's saying targeted realized. With real estate, you hold back some money to make sure that there's no, legal, it takes a little while to figure out all the nickels and
Sure.
dimes, right, of the deal.
Sure.
We're expecting it to yield, north of an 18% return annualized to our investors with just shy of a 5% cash yield. And that gives you 1.7 multiple. And just to put that in context, for every dollar investors put into this deal, they're getting $1.70 back after 3 years. Not too shabby.
What is like a typical year like on in terms of activity, buying and selling on your end?
It's tough to say right now because we haven't had what I would call a typical year.
Typical year. Yeah. What is a typical year in this market?
2020, it was dead, right? So once COVID hit, transactions completely flatlined. Towards the end of 2020, we started doing some more deals. I believe we picked up an industrial ground up development at the end of 2020. Coming into 2021, we started accelerating, and this year we've really, been accelerating the number of deals we've been doing, and that's also in line with the demand we're getting from investors. So a lot of new investors on our platform. We're thrilled about that, obviously, and there's a lot of demand to bring new deals. So we've been doing, some hotel deals, some multifamily, some deals like this that are, at more bread and butter Cadre value add transactions as well. So.
All right, I want to zoom out a little bit and just go national here. One thing I've neglected to ask you for throughout all of these segments is, hey, David, what cities are hot right now? I mean, they're all hot to some extent, but what's the hottest? So what can you tell us there?
Sure. Well, the way that we think about it is we want to be laser focused on targeting high growth markets, right? And to be honest, that's kind of something that everyone says anyway. But we really mean it. And we use a lot of data science to help us get there. So we've created something that we call the Cadre 15. We've identified what we think are the 15 highest growth markets. And this is on a go forward basis. So we're not just looking at what markets were hot last year. We're doing is tracking all the transactions across over 50 markets throughout the country and breaking it down by office versus multifamily versus, retail or industrial, and looking at all these markets. And then our data science team, I got to tell you, I wish we could bring them out. Our team is exceptionally talented and really bright people that always make me feel stupid when I talk to them. But they do a lot of work with machine learning and AI and neural networks. Don't ask me to define what that is. But we're modeling out and forecasting all of these markets over the next 8 quarters or 2 years. And we want to identify markets that we think have the best position to grow faster than the rest of the country. And then what we do is take our acquisitions guys, the guys that are out there sourcing deals, put them in those markets, and spend 80% of your time on these 15 markets, proactively looking for deals. And the idea simply is, if we're fishing in a pond that's stocked with the biggest fish, you have a better chance of having outsized returns, right? So if these markets are poised, and we're accurate in assessing that, if these markets are poised to outperform, then on average, we should have an easier time finding assets within those markets that should outperform. And you see that up on the screen. So on the left side is the map of the US and our 15 markets right now. We're going through a revamp. We're evaluating markets right now. So this is going to be changing soon. We're very excited about that. But on the right-hand side, you can see how the Cadre 15 has performed relative to the broad market. I'm thrilled to say that so far it's been outperforming. So our data science guys have been pretty accurate in forecasting markets that they think can outperform.
I mean, I'm looking at the map there, and so it's surprise to see the Sun Belt on there. I mean, Nashville, Atlanta, Charlotte, Tampa.
You're thinking about this through the lens of the rearview mirror. So today,
okay, you're right. Guilty.
But when we first came up with this list several years ago, some of these markets weren't necessarily as obvious. So some of the markets are going to be relatively obvious, but not all of them are. And even when you look at in Austin, you have to ask yourself, given the recent rent growth and expansion and valuation increases we've seen, is it sustainable? Just because Austin's been hot, do you want to buy today? And that's really a key aspect that our data science team, example using Austin, we were able to actually decompose the factors that drive rent growth in Austin in a way that's very similar to what you would do in equity analysis, using a Fama-French 4-factor model. And doing that, we can really understand what are the drivers of rent growth. Is it sustainable? What's the downside? And break it down into a granular level that I think that no one else in the real estate investment world is thinking about things the way that we are. Now, does it add value or not? That remains to be seen. I think the numbers so far bear out that it does. And the point here isn't that all of this stuff determines what markets we're in and what assets we buy. This is all done in conjunction with our very experienced investment team that is taking all this data and using it to help them be faster and better and marginally, on the margins, if we can have a better edge with all of this, that's a huge win.
I think that's the first Fama French reference on this show. I don't know if that's good or bad thing.
I
Probably
would
bad.
think your audience is familiar, right? I mean, this is.
I don't know. I would hope so. If you haven't looked into the Fama French model, check it out. I only have dipped my toes in, but those guys were smart.
Leave it to the CFA guy to bring up.
Yeah. Right. All right. So these are, and you mentioned that this list is going to change here, but for the moment, at least, we can see that the cities on this map are where it's especially hot right now, at least from an investor standpoint in real estate. Obviously, from a buyer standpoint, it's you're on the other side of the coin there to some extent, right? If you're trying to compete.
These are all markets that we're actively looking to buy right now.
Okay. All right. Yeah. Well, yeah. You're looking to buy because right. Okay. Right.
So
I guess I was.
It's you benefited if you have been in these markets, but as a buyer, we think there's still opportunity. But again, we're looking at thousands of deals a year come across our radar. We're only really digging into a couple hundred, and of those, we're only really buying like 1% to 2% of the deals that we're actually underwriting. So we're very, very selective because even in a high growth market, you got to find the right asset in the right location within, say, Tampa, and you got to pay the right price. If you pay too much, you're toast.
So in looking at, some of these smaller and mid-sized cities like Tampa, Austin, seeing massive inflows of people, where are they coming from? Is everyone just leaving New York, and like that's the cliche, that's the obvious thing. Is that actually the case?
It's funny. So some of it's New York. I think it's more like now San Francisco and LA, especially in the West Coast and the Sun Belt coming into like Austin and Phoenix. There's been a lot of stories about that. What's interesting about it, though, is that a market like LA is so big, the population relative to Austin. So you don't need a 5% decrease in the population of LA to give you a 5% increase in the population of Austin. So because you're starting with different base sizes, a small decrease, a small migration out of LA can have a disproportionately large positive increase in Austin or Phoenix and some of these other markets. And I think that's what's really interesting.
Fair enough. All right. If you have any questions for David, Vincent about real estate at all, now is your chance to ask it. David, before we let you go, I just want to recap a little bit at a high level some of the things we've discussed in previous segments again. So if you can, and we're trying to be quick here. I don't want to take up too much of your time, but if you can, talk about real estate and how it behaves as a sector or as an asset compared to like maybe stocks, for example.
Sure. I mean, well, the one thing I always want to frame people on is it's a big asset class, a lot bigger than people realize. So if you're not invested in real estate, you're taking an active bet against it in your portfolio, right? I mean, it represents about 16% of the total market portfolio. So that's first and foremost. Now, why? That's not the reason why to invest, but that just tells you how you're positioned. Why to invest? Real estate historically has been a very positive addition to a traditional stock and bond portfolio, whether it's reducing volatility, increasing returns, or giving you an attractive, stable yield over time. But right now, like why today, we hear a lot of stories about these hot markets, prices are up. Should you buy? Listen, with inflation at 8.5% right now, who knows where it's going? Real estate historically has demonstrated a very attractive ability to be a hedge against inflation, both from increasing the yield that you're getting the cash flow. So cash flow rising with inflation is good as the dollar's losing value. But at the same time, valuations have historically gone up. And we've done a number of analyses on this over time looking at inflationary periods. And we could certainly follow up separately on that. But there's a lot of data that supports that.
And then what sort of things are most important that an investor needs to sort of have in the back of their mind when they're looking at real estate, and maybe looking at adding some real estate to their portfolio. And let's say they want to look at like a specific real estate, like a deal on Cadre, for example, or even just like in judging whether a real estate deal is maybe good or bad. What sort of things should they be looking at?
Well, I'd say whether you're looking at a Cadre or an online platform, or if you're talking to a brick and mortar offline real estate guy, there's a couple basic things, right? One, you want a partner who has a solid track record, right? Someone who has experience. So you've seen them through markets, you've seen what they do, how they do it, how they execute, and what types of returns. Because what's great about real estate is in many cases, you can see how the operator is creating money or making money for their investors. Is it value add? Is it buy and hold? Is it off market transactions? Is it niche strat? Whatever it might be. Listen to what they say they do. Look at their track record. Does it line up? And does it make sense for what you need in your portfolio? And then, I'd say the last thing really is finding a partner that has a differentiated edge. It's not hard to go out and buy a building. There's buildings for sale everywhere. They're broadly marketed. It's not going to be a good price, or there might be reasons why that asset is not really attractive. So having a partner with a differentiated edge that can bring something to the table that demonstrates why they're better than someone else who might be equally experienced.
A couple of questions from our chat before we let you go. Ashton Tam wants to know, what are your biggest concerns when it comes to real estate? Great question.
So I guess if we're thinking about kind of holistically, like macro top down, where could real estate go sideways, on an investment perspective, I'd say the biggest number one concern would be a stagflation period, right? So if you have high inflation, runaway inflation, and you have flatlining or even declining growth. Now,
which is relevant to today, I might add.
Worst case situation. Now, we've seen headline GDP negative. I think there's been a lot of really interesting analysis around that. That seems to be more driven by supply chain disruptions than anything else. The underlying fundamentals seem actually pretty strong. I don't think that anyone's really predicting a stagflationary environment in the U.S. in the foreseeable future. But that would really be the biggest short-term hurdle. And the way that I also think about real estate is, especially in this country, it's a long-term bet on the growth of this country. So if you're negative on the prospects of this country in general over the next 10 years, real estate might not be the best asset class for you, but I would argue probably stocks or bonds aren't going to be either. I don't know what you invest in then. So if there's long-term growth and population growth and job growth and GDP growth over the long term, these are long-term assets, real estate tends to do pretty well.
And then we'll end with this one. This was a specific question regarding the Sunbelt states. I don't know if you could speak to this per se, but Mick wants to know if lack of water is factored into the equation there.
It's funny. I was actually at an investor lunch not too long ago, and a woman turned to me and said, "I would never buy in Phoenix because of the water." I was like, "Okay, that's fine." She was projecting that they're going to run out of water in like 20 years. I don't know what the number is. We're not, the assets that we're buying today or that we own today, we're not planning on holding that long. In the short term, over our investment horizon, those challenges in the climate are not really drivers of risk for us. That may very well change over time. In 10 years, will we view Phoenix as being an attractive place to invest? I don't know. That's a good question. And we get the question a lot about how people think about that. But when you look at demographic trends, clearly, forget about the investment side. People are moving to some of the most arguably climate sensitive markets in the country, whether these are coastal cities or in the Sun Belt, places where they have, potential water issues and things like that. So we're seeing that the population is actually moving into the markets that people might have the biggest concerns. And that's helping near-term valuations, at least.
If you are at all interested in real estate and investing in private real estate, I would highly recommend you check out Cadre. Their link to the site is in the chat. It's pinned to the top. It's also in the description of this video. David Vincent is at Cadre. He's their investment specialist. And David, thank you once again for doing this segment. We appreciate it. I'm going to cut all these segments out and put them up together in one place for everyone to be able to watch them all at one time. But guys, any questions, you can always reach out to David, reach out to me, and I'll connect you to David. But David Vincent from Cadre, thank you again for doing this, and
we'll see how things develop here.
Thank you. It was great. Bye.
Always an adventure in real estate. Well, in everything really, but it seems like real estate especially. So I've been getting more and more involved. Not involved, interested is the right word. In real estate, I'm coming to that age where I'm, looking. I'm not looking to buy a home now, but I'm like thinking about looking to buy a home. If that makes sense. When you're thinking about doing something, you're like, I'm not doing it, but I'm thinking about doing it.
I have a dumb question.
Yeah.
When people talk about refinancing their mortgage,
Yeah.
do you have to like essentially sign like a whole new like 30-year mortgage, or do they literally just like bring your rate down from like whatever it was 4% to like 1.5%?
Well, think about it from the point of view of the bank, right? Like, so you're getting when you refi, you're getting a lower rate, right?
Correct.
Why would the bank do that?
That's what I'm saying.
Right. So they charge you a fee.
But
Right.
does it lengthen your term or not?
I don't know. Someone who has a mortgage, help me out.
Because I think my family, I think we screwed up. I think we just didn't refi like at all whenever the rates went down.
Oh, that was a mistake.
I know, and I'm just saying, like, why do I have to be the one that like brings this to the attention? And of course, I'm doing it like retroactively.
If you refi, does the length of your mortgage reset? It resets. Yes. There we
Okay,
go.
so then
Yeah,
that's the price you're paying. You're saying
yes.
You're saying, okay, we have 4% of our current mortgage left for 10 more years to 2032. I'd almost rather just pay it off and get it done than refi 30 years out
Right.
at 1.5, even if it's not necessarily a smarter thing to do, just because I don't even know if I'm going to want the house in
True.
2050.
And fortunately, it's a very simple mathematical equation, right? You just do the math. Whatever you're going to end up paying less is probably the better decision. Are you better off just holding on now? And
Holly said yes, and I'm seeing some mixed comments. Holly said yes in all caps, and I know she's in the real estate industry, so I trust that.
Yeah. I mean, mortgage rates are at their highest in 14, 15 years now. They've gone parabolic, and it was the biggest year-over-year increase in the average 30-year fixed rate in like 50 years, because it went from the floor to not at the floor anymore.
I don't even care. Like, we're never gonna be able to buy homes anyway. I'm just gonna be able to maybe. I'm maybe gonna be able to rent one out from BlackRock. Hopefully.
So I'm glad you mentioned that, because I've also said like, what if I just said screw it and just invested in like a Cadre, right, or a platform like that, and like that's my real estate, because the biggest, aside from the psychological component of owning a home, the best thing that owning a home does, as from an investment standpoint, is it literally forces you to build equity over time, right? It forces you, because you got to pay your payments, right? Unless you want to, be like those people in 07, 08 and default.
Is that Devo? I can't tell if you're saying it's simple, this is the standard, or if you're saying this is like best practice, because this sounds like it'd be best practice if it's not standard to get a 30-year mortgage but sign a 5-year fixed rate to say, okay, let's reassess what the interest rates are like in 5 years. But you could also get screwed like by that if they go up a lot higher.
Right. So, but what I was saying though is like, I've been thinking like my way to just hedge my own ability or inability to buy a house I may end up just investing in one of these in real estate, because like in one of these online platforms, because I still want exposure to real estate, but I don't want to get, like, if I get priced out, I know
you got to run, but I've got a few things I got to.
Oh, I have a 1:30 phone call.
I got to address.
I totally forgot about that.
At the chat. Yeah, you can run.
Shoot, I know, but I want to come back though, because we still haven't talked about GDP yet.
Okay.
David mentioned stagflation. What is stagflation? Right, it's when inflation goes up and the economy doesn't grow. We got our first GDP reading of Q1, and it was negative. It was bad. This is bad.
I mean, don't tell the stock market. It looks like, Amazon's up 4.5% right now. It looks like we got early prints or something. The way stocks are trading right now. Apple up 4.5%. Literally, Apple is up 4.5% trade. They haven't even announced their earnings yet.
Dude, I'm even more bearish. I was bearish an hour ago. I'm even more bearish now.
I don't get it. All right, Spencer, go do your call.
I have a quick phone call. I'll be back, guys.
I see you guys talking about Luke Bryan country. So Mike said I'm a country throwback, but then you said you like Luke Bryan. I agree on the country throwback. Like if you play some old, not even Johnny Cash, but just like like I just feel like older country songs were better. Like now you put on a country radio station, it's all Luke Bryan and the same exact shit. Like literally they're playing the same like Florida Georgia Line station on the country radio that they were like 5 years ago. And all the songs sound like the exact same. So I'm more of a fan. I actually really like bluegrassy kind of music. So anything like that that's more like old school country, almost more like country rock kind of. Love that. Love that. Thoughts on Affirm? I am not a fan of Affirm. The business model, the stock in any real fashion, right? I will say there's a chance that in an environment where people are struggling, people may be forced to put things on buy now, pay later. But I think that's a terrible thing for the economy. We've seen how that kind of has played out historically when people are taking too much debt out, or there's like a credit card debt bubble or anything like that. So I don't know. All these name a fintech out there, name like a growthy fintech stock, and it's been getting battered. Well, not today, but outside of today, been getting battered, right? Square. Look at Square. Let's look at Affirm, right? Look at PayPal. And all these guys are doing similar things, right? I mean, even like SoFi. I don't think there's that much interesting happening in the space. Honestly, the most interesting thing in the most interesting thing in the fintech space to me, okay, Jay Rice, I'll give you that. I like Luke Combs a lot more than Luke Bryan. More so, I was talking like about Luke Bryan. Like I feel like he's very like country pop kind of, and it just all like sounds very similar to me. I got to go back through some of my playlists and find like some of the people that I'm talking about that are like more old school country, kind of bluegrassy that I really like. Really a lot of like Appalachian. But what was I saying? So yeah, I mean, I was gonna say the most interesting thing that I think is happening in the fintech space is if some of these bigger names like Google, like Facebook, decide to get into the fintech space. There's like nothing stopping Google from becoming like, oh, do you want like a Google, have some sort of payment? I mean, they already do, right? They have Google Pay. So if you have Google Pay linked to your Google Chrome account and you're on a store, you can use Google Pay to pay for something instead of PayPal. So why I don't want to be in any of these fintech names that are going to have to compete with the Amazons, with the Googles, with the Facebooks. Facebook has already kind of floated that out there. Said, what if we became, and they had an opportunity to really lean into this like 10 years ago, right? When you had everyone in the world in like 2014 or 2013, like everyone that had Facebook accounts, everyone had Instagram, they had an opportunity to say, let's do some banking and we can become every single person's bank that doesn't have a bank or doesn't want a traditional bank. And if you don't think there's a market out there for someone to come in and kind of revolutionize banking in that way to just make it easier, more accessible, you're wrong. Case in point, I have a friend who legitimately uses Venmo as their bank, right? Does not have a Bank of America account or anything like that. He gets his paychecks direct deposited to his Venmo. He has a Venmo debit card. He has a Venmo credit card. And he's like, what? It's easier for me. It's all on my phone. Facebook could have done that. So, I don't know. Eduardo, do we think Kathy's going to buy Teladoc today? Spencer showed us this site yesterday. I'm going to pull it back up. Kathy's Arc. It's just kathysarc.com. And right now we're on the combined tab. So this is looking at all 141 combined Arc Invest ETF holdings. So every single company that ARK is invested in throughout its different ETFs, this site is tracking the weight of it. Teladoc is number 2 behind Tesla. More than 5.5% of all of Kathy Wood's investments in ARK are under someone. I see what you did there, Zen Billish. Is in Teladoc, and Teladoc's down like 35% today. So just some quick mental math. Say 30% of 5.5% is 2.5%. She's lost like 2% of ARK's wealth just today on. Well, actually, I gotta check Teladoc stock because it may have made a comeback with how everything else is doing. Nope, still down 44.5%. All right, so I was being way conservative with 30%. I honestly, when I saw Teladoc's price action today, like my first thought was like, could this be like the end of ARK? Like, could this be ARK? I don't know if ARK's on like leverage or anything, but like if ARK like blows up or like has to file for bankruptcy, it's gonna happen on a day like this where one of the prime holdings. And by the way, Tesla's down 20% this week, so 20% of 6.5% of the weighting been down this week. Also, look at how much of Teladoc ARK owns. So that shows that if ARK starts unloading its Teladoc shares, then the stock is in for even more pain. I never want to be in a position where you're single-handedly upholding the price of that asset, which is kind of like how Elon is with Tesla, right? Elon is by far Tesla's biggest shareholder, 172 million shares. Every time Elon, which has happened a couple times in the past year, every time he has had to sell Tesla or even talked about it, the stock has had to drop. I would love and hate to see what happens to Tesla stock the day that Elon really has to do some substantial selling. Because Elon has sold like a quote unquote substantial amount of stock this year. Like I want to say like 10 million shares. But over the last year, he actually owns more shares than he did before, even with selling those shares, because he has all these options in his contracts to buy more shares at a certain price dependent on the performance of the stock. So if Tesla stock is or performance of the company. So if the company is doing well, he has an option to buy another million shares at $70 a share, whatever it is. So he, through these options in his contract, is actually able to own more shares than the one that he's offloading. So even though Elon Musk has sold shares, he still owns net more shares than he did a year ago. If that were to change and he were to actually start selling shares to the point where he's owning less and less, the stock would effectively collapse. It's why people say, oh, Elon has a net worth of $200 billion, but he doesn't really have $200 billion because it's all in the stock. And if he went to sell the stock, then he wouldn't have that much. But the flip side to that is when people say things like that, like, oh, he doesn't really have $200 billion. He kind of really does. Like, even though it's not realized, it doesn't mean it's not real, right? You just saw with a Twitter thing, like he's able to use that stock to get a loan based on its value to free up money. So the bank that's giving him this loan based on his Tesla stock isn't saying, oh, that's not real value, you would have to sell it. They're looking at it for what it is. And what it is $200 billion worth of assets. It's worth what it is. It's an asset at the end of the day. So I just think that's funny where you'll see that argument kind of on Twitter a lot. Like, oh, he doesn't really have that much money because it's in stock, not cash. It's like, yeah, no shit. No rich person really has all that money, all their network sitting in cash. It's all in investments, whether that be real estate, gold, stocks, you name it. I mean, I would bet you a lot of money that the richest people in the world, the majority of their net worth is not just sitting in cash, right? Bill Gates doesn't have just all his money sitting in cash. Archegos, yeah, we talked about Archegos yesterday and Bill Wang. Just catching up on the chat here. Proud to be. We can talk about Fisker. So Fisker was actually my pick in the basket of these like down the road EVs, right? Basically the EV companies that are pure play EVs, right? I'm not talking because like Volkswagen, Toyota, those are some of my favorite EV plays right now. Ford, even though they're not fully out of all the EV companies that are purely EV that are still very much down the road, Fisker is one of my favorites, right? Like I'd rather own Fisker than Lucid. I'd rather own Fisker than like Xpeng. I'd rather own Fisker than Helion. I'd rather own Fisker than Nikola. I'd rather own Fisker than Lordstown Motor Ride. But I don't really have any, like, at this point, Fisker is nothing more than just a speculative bet that A, the electric vehicle market is all that it's hyped up to be. And part of that is becoming a big enough market for all of these players. Because think about this. Right now, the automobile industry is already a very, very hard industry to be in for these companies, right? You can look at any legacy automakers kind of just stock performance like over time. Like, well, Toyota's has actually done very well, right? But basically all these companies at some point in the last decade, in the last 20 years, most of it brought on by the '08 financial crisis, have had to kind of file for bankruptcy. Let's look at GM's chart over time. Just historically, like a hard industry to be very profitable in. The margins aren't great. The EV industry will have to grow to a point where it's big enough for all of these legacy automakers, GM, Volkswagen, Toyota, Nissan, you name it, to have their EV cars out there, and then also these new players coming in. And I'm just not sure if it gets that big. I think some of these new players coming in will be able to create a foothold and stay in to kind of hold some market share in that industry. You know, your Fiskers. But I don't think EVs are going to be big enough to where every single one of these companies, Fiskers, your Lucids, your Lordstowns, all of those that are trying to come into the market are going to be able to have market share and compete with each other on top of the more legacy ones. So Fisker is one of my favorites out of those kind of down the road. I also like Boyd because BYDDF, I think the ticker is. Yep. Just because this is Elon Musk, or not Elon Musk. It's Warren Buffett backed. So, shoot, Spencer's not here, and I kind of got to take this call. All right, guys, give me 1 second. You know, this will be fun. We'll take this together. Hello?
Hi, is this Aaron?
This is Aaron.
Hi, Aaron. This is Pam Shelton at Comerica. How are you?
Oh, hi. How's it going? Can you mind if can you call back in about 20 minutes?
Sure. This is regarding a statement. I sent you an email. I just wanted to make sure you received it.
Perfect. I'll check right now. Can I give you a call back at this number in 20 minutes?
Yes, you can. Thank you.
No problem. All right, that was just my my bank calling me. I hope I'm not in trouble. All right, guys, throw it in the chat. Give me some other stocks to look at. Those are my thoughts on the EV market. Snap in the green. SoFi. Let's check in on our good friend SoFi. Amazon. Wow. I mean, everything is just... Oh, look at Google, though. Kind of given some up here in the past 10 minutes or so. Big red candle for Google there. I gave you guys my thoughts on what I think is going to happen with kind of earnings tonight. I'm short Amazon, more long Apple, although I'm not still very long Apple. So we'll see. We shall see. It looks like I got Spencer coming back.
I don't understand.
I don't know. They're fighting about something. I have no clue. Can you guys smash the like, by the way, if you're here?
I'm the reason I'm confused is because Sharon from HR just messaged me. She was like, Spencer, I thought I was going to come on the show today, and I gave her the link, and she's not here. So yeah, she goes, I clicked the link. I don't know if it's working. It ain't working, Sharon. Sorry about that, guys. I had a phone call that I couldn't get out of. This it was for tomorrow.
Well, at this point, we should just have Sharon come on a different day because we only have 15 minutes left.
What haven't we talked about yet
We haven't talked about GDP. Was the one.
Oh,
big thing.
GDP
But
is
I
so
also,
scary.
But I also have two other things I wanted to get to that aren't really market related. So I saw Kevin O'Leary on the TV a few seconds ago on a commercial. He was down in Miami this past week
Oh, yeah, for the thing.
for the event.
Yeah.
Yeah.
Okay.
I met him. Well, I it was kind of weird. So we were like hanging out. He was getting ready to go on the panel with Jason, right?
I think Tim wants GDP. I'm just a hunch. I think Tim wants to talk GTPI. I don't know. I'm picking up on that vibe.
If you spam, you will get booted.
Wait, all right, finish up, Mr. Wonderful.
So he was getting ready to go on the panel with Jason. I was hanging out doing some like operational shit behind the stage, and he was like on his phone. There was like 5 minutes till the panel started. I knew like he'd be busy after the panel, and I was like, I should probably like introduce myself right now. But Jason was right there, and so in my head, I was having this like internal battle because I was like, Jason might get mad if like, because like Kevin was on his phone. He's like, don't bother the guy. Like he's about to go a panel. Like he doesn't care about like meeting you. But then if I don't say anything, what if Jason's like, why are you being so passive?
You're
like,
damned if you do,
like,
damned if you don't.
You got to like be more aggressive, assertive, and like say hi. So finally, I'm like, you know what? Just fuck it. Like, hey Kevin, how's it going? I'm Aaron with Benzinga, and he like looks up from his phone. He's like, hey Aaron, how's it going? Like shakes my hand, like looks back at his phone, and Jason kind of sees it, and he was like, oh yeah, and Kevin knows Renato from Benzinga because Renato's done a lot of stories with Kevin and some other stuff. So Jason is kind of like, oh yeah, Aaron works with Renato, trying to like, and then right when he said Renato, Kevin's eyes kind of lit up and he's like, oh, Renato, you know Renato. I love Renato. And I'm just like, yeah, great guy, like whatever. So
wait, but did you pitch him an idea? That's the question.
No, I did not.
Damn.
I did not. The other thing I was going to say that isn't market related, what are the biggest like catchphrase type things that you wish would make a comeback? Because I just saw someone say something in Slack that I legit don't think I've seen someone say in like 5 years, but I was like, oh, that's pretty cool. Like we should bring that back.
All right, you're gonna hate me for this one. I might be the only person alive, but I think we should bring back weather. It never stopped being funny to me.
Originally from like a commercial or
yeah, it was from a Budweiser commercial. It never stopped being funny. 20 years later, Aaron Thomas has an opinion.
Editor, please clip that.
All right, what do you think we should bring back?
Well, the thing that I saw someone say in Slack.
All right, sorry, I'm done.
Was far out.
Far out.
Yeah, someone was like, oh yeah, I did that already, and they were like, far out. I was like, holy shit! I don't think I've heard someone say far out in like
20 years.
I don't even know, but I was like, that's kind of cool, especially it's
far out, man.
Yeah, it's like retro now. You can say far out.
Well, you know how it's just like how I couldn't believe this. Now we're getting really off topic, but you know, bell bottoms are back in style.
Yeah, dude, things just come back in.
I can't believe it.
Things just come back in style like 20, 30 years after they were popular.
Yeah, that's crazy. Oh,
Happy,
wait.
Isn't that like a slur?
Wait, I just realized I gave Sharon the wrong link.
Oh, my God. Spencer, egg on your face.
Oops, sorry, Sharon. My fault, Sharon. My fault, not yours. My fault. Groovy. For show.
Off the hook. Off the hook was kind of cool.
We went off the chain.
Off the chain, off the hook, yeah. Or wait, no, maybe I think it's off the chain, not off the hook.
Yeah.
Off the hook is like you're let off the hook.
Tastes great, less filling. Dude. Tastes great, less filling. Yes. Old corporate slogans. Diet Pepsi is light, crisp, and refreshing. What happened to that? All right. You want to talk GDP for a second? GDP came out this morning. If you don't know anything about this number, we get 3 GDP readings, right? Every single quarter. We get, this is from the government. We get the first reading, which is probably the most important reading, and then they revise it twice. So we got our first reading for Q1 US GDP, and it came in lower than expected, kind of by a lot. If I go into Benzinga Pro, I get the exact number here. So give me a second. I think the estimate was 1.1%. Wait, why can't I find it? I'm searching for it. Oh, it's because I have my filters on still. I never got rid of my filters for when I did the Amazon thing. There we go. All right. GDP was expected to grow 1% quarter over quarter. It actually declined 1.4%. So that's not the final number. They're going to revise that 2 more times, but it is alarming because this speaks to what David was saying. This is the nightmare scenario. The nightmare scenario is stagflation, right? Rising inflation and a stagnating economy. Because it's a 2-front war, and you can't fight both fronts at the same time with monetary policy. So I've seen some viral tweets today that like, oh, this is it. We're in the shit now. It's happening. I don't know if one GDP reading is enough to say stagflation is here. And if you were listening to David Vincent, you heard him say that if you look under the hood, a lot of that, the reason for that GDP weakness was due to supply chain chaos. And once that gets sorted out,
That's basically the bottom line is with all this, with all these economic numbers, like when you dig into the data more, it becomes less scary than it looks on first glance. And I'm starting to think like, I feel like a bullwhip effect is becoming more and more probable, right? If everyone's pricing in, stagflation, all this, like what happens if like what you're saying, a lot of this was supply chain driven. What happens when these things start to get figured out and then all of a sudden you have like inflation dropping, GDP growth, like I think that's a possibility that like you start seeing in a couple months these numbers not looking as bad as everyone's seeming right now. And then you get like the bullwhip effect, and then you can see on the what's it called?
I don't know what you're. I don't know that. I don't know what you're saying. Bullwhip.
There's like some economic. I'll figure it out.
Whiplash.
No, but it's.
I don't know where you're. By the way, guys, Facebook is about to get above its after hours high from last night. The after hours high was 210. We're at almost 207.
Yeah, the bullwhip effect is essentially like speaking in supply chain specifically, like the price of something is a lot higher because the demand is higher. And then all these suppliers rush in to meet that demand. And then you have essentially a surplus of supply. And then the bullwhip effect is that price dropping further down than it was initially because supply has gotten so big.
No, Kyle was asking if there was a headline that just came out. No. I mean,
yes, there's always headlines coming out.
No, but not in the context of the overall market though. So yeah, we're near the high of the day right now. But no, I did not see, unless I miss. Again, I've been on with you guys for the past couple hours, and when I'm on with doing the show, it's very difficult for me to kind of pay attention to market news as I'm doing it.
Man, Apple, what an incredible move Apple's made.
I don't see any specific headline unless someone wants to correct me if I'm wrong. I know Biden spoke this morning, but it certainly doesn't have anything to do with him. I don't think the market listens to him, frankly.
I don't know if anyone does.
Frankly. That's true. I'm sure some people do, but most probably don't. Anyway, Facebook is looking like it wants to close above 200. Looks like I'm going to be wrong there. How's my Twitter doing?
Huh? Probably.
How's my Twitter doing? Twitter. Oh, you know what? I'm in the neutral mode. Because just stop going down. Just stop going down. The more it goes down, the more I'm willing to freak out.
Which?
Twitter.
Oh. Well, it's actually kind of cool, the price action of Twitter, because you can just see in real time, like how the probability,
it's so bizarre.
How the probability the market is giving Twitter, which
it's so strange. You never see this. You never see a stock that's getting taken over and that they've agreed to the takeover. You never see it move this much after the fact. It's so bizarre. I can't remember a time where a company has agreed to the deal and then the stock still moves several dollars in each direction.
Yeah. So something that what I was just saying that looking at Twitter gives you a live like proxy into how the market is pricing in the odds that the Twitter deal gets done.
Yeah.
I think there's a lot more things like that where if you look at how the market is responding to something, it might give you some insight into like the real odds, quote unquote, if that makes sense.
I don't know if I follow.
Like, for example, if there's a new like COVID scare, right, and the media is talking about this new
The media.
the media, the mainstream
Big-
media, like
big
CNN's
bad-
talking about this new
Big bad media.
yeah, no, I mean just fine, Fox, whoever you're talking about. If people on the street, not the media, are talking about this new COVID variant, and you're like worried about it, and you look at the market, and the market's like,
Okay,
so
so
this isn't a big deal.
what you want is like an options market for real life events.
No,
It sounds like.
I never said that. I was just saying I think.
But that's what the options market really is in a way, right? It's pricing in future risk.
yeah.
So
Well,
that's
you can say that about the stock market too, though. You're betting on future because at the end of the day, you can own individual companies, but the macro. I mean, if we go into a Great Depression like recession, and you own the best stock out there, guess what, buddy? It's still crashing.
No, but the stock market only allows you to bet on future price. The options market allows you to bet on price and time, right?
Correct.
So I think that's what you're going for, right? Which is like you want to be.
I'm not going for anything. I was saying I think it's cool that you can look at that, like the market is live pricing in the odds of everything that's like happening. So in my example was if there's a new COVID variant and you're worried about it, but you check the market and the market's up, basically saying we're not worried about it, then like that's to me could be a better like predictor of the real risk involved than if you were watching just the news or talking to Joe Schmo on the street or wherever you were.
All right, that's
that was
fair.
basically my
I think it's
my
telling that like you don't think like the futures market is like does that already, which I agree with you. I don't think it does because the market is.
It does. I'm
it's
saying
just-
I'm saying I think it's cool. Like you can literally
no,
look
I
at.
don't think it's so inefficient. It's all computers streaming with other computers. I just think.
Well, there are inefficiencies. For example,
Yeah.
like when COVID first hit, like I remember turning on CNBC when all these when Italy was getting shut down, but COVID wasn't bad in the US yet.
Yeah.
And like stocks were holding up and people on CNBC were saying like, oh, like we don't think this is going to be a big deal. We've seen this before with Ebola, with Zika. And I was sitting there like, bullshit. How can you guys look at what's going on and sit here and say
language, sir?
Oh yeah. I did just literally see a kid like walking around.
There is a child in the office. We need to.
But I was saying bull crap. Like you can just look and see what's going
not
around.
much better.
And say, hey, that's not, that's just not what's going to happen here. So I went and shorted the market and it worked out. So there are inefficiencies. I'm giving you that. I'm just saying for the most part, that's where I'll go to for a proxy. Like say like, if the market is down, then there's some serious concern out there. And the guys that are putting skin in the game, these guys on Wall Street that have billions and billions of dollars. They like you don't think they're keeping track of everything and knowing the odds. They have actuaries and all this shit. So
actuaries. All right, how's crypto doing today?
mine was fine.
All righty, mostly green. That's good to know, right? Bitcoin, ETH, Solano, Doge. Slightly down. Where's Shiba? Shiba's on the green a little bit. That's cool. Look at ApeCoin. ApeCoin has been an absolute monster. This thing showed up on the heat map, like last week, 2 weeks ago, and has quickly become one of the largest coins by market cap. What a beast. Up another 14% today. Anyway, I can't get your free ApeCoin, but I can get your free Bitcoin. Just go to Voyager, create an account, use the code ZING, Z-I-N-G. Fund that account with $100, make a trade, and they will send you $50 worth of Bitcoin straight to your account. All right. That's going to be a wrap for today's show. We didn't get to most things, that's okay, but that's what we do. That's normal for us now. So we'll have to cover this tomorrow. As a reminder, coming up next, we have the roadmap. I'll be back for At the Close, and we are streaming both the Amazon and the Apple earnings calls today Apple is I think at 5 p.m. Eastern, and Amazon is I think at 5:30 Eastern. But regardless, we're gonna have both those calls streaming on our channel. I'm gonna be hanging out in the Apple call, if you guys want to come hang out with me and do that. So do us a solid before we end the stream here. Just hit that thumbs up button for us. I feel like a broken record, but it really does help. And thanks to all of our guests. Thanks to David Vincent from Cadre. Thanks to Vivi. Thanks to Luke. Who am I missing? I'm missing someone.
Bernard.
Bernard, thank you.
I was
Bernard.
about to call him like Brandon. I was like, I know that's not right,
No,
but it's close.
I'm missing Bernard.
By the way, how are all the Brandons doing out there? Tough year for Brandons.
Tough year for Brandon. All right, let's end the show now by replaying the hype video for Vegas.
Woo!
Because I'm super hyped.
Las Vegas.